there are a lot of real fundamental issues that are going to be pulling down inflation.
Next quarter or two, we stay in this nominal GDP dwarfing real GDP environment, right, driven by still elevated inflation.
You can't ignore the shorter term data. You have to take it all into account.
I think we see equities down in the near term, possibly recovering towards the end of the year.
What's different this time, I think, is that if we have a recession, it's going to be a Fed-induced recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
The band is back together around one table. A beautiful thing. Happy New Year, TK.
Happy New Year.
Brett and I did that yesterday.
It's overdone. I'm done.
I'm done with Happy You're done with Happy New Year.
It's like,
okay.
Let's move on.
Larry David said you can have about 3 more days if you want it. You don't fancy it? Okay. From New York City this morning. Good morning for our audience worldwide on TV and radio. Happy New Year. Let's talk about Tesla. Tom, the stock down by some 12% in yesterday's session. Bit of a bounce back this morning in the pre-market by about 1.5% or so, but huge pressure on that stock, TK, to close out last year and to begin this year as well.
I have no idea where the tip point is for Mr. Musk, but as a predominant shareholder, I noticed on the HDS function on the Bloomberg terminal, this is the lineup of who owns what. Vanguard, BlackRock, all the index funds out there with obligatory ownership. He's at about a 3 factor over them. He has 11, 12% of the company. Whatever the number is, it doesn't matter. The answer is with this plunge down and this new leg lower, the critical thing is where is that tension point for Mr. Musk?
I think it's right here, right now. We're down 60% since the start of Q4 for that name. It's been brutal. I'll catch up with Pierre Farago a little bit later of New Street Research. Still bullish this name.
601 and you're already promoting your show?
Well, I'm promoting Pierre Farago of New Street Research.
Okay.
At 9:40 Eastern Time on Bloomberg Television, for anyone interested. Now, you mentioned it.
Good.
Lisa, this is his line. It will be able to grow fast and maintain superior margins for years to come. The bulls are still out there saying buy this name.
Oh, but it's not showing up in the price. And you're seeing that from Kathy Wood as well, saying that she's going to buy this dip. She's been saying that in every dip, all the way down about 70% over the past 12 months. I am curious, though, about whether we see a similar type of decline in the deliverables from other automakers. We see that today with some of the auto sales numbers for December. Do we start to get a sense that Tesla isn't alone? And if it is alone, does it get punished all the more for possible loss of for dominance?
Well, it's not just Tesla and it's not just the automakers. Tom, it's Apple as well. Apple yesterday down by more than 3%, close to 4% lower on the session. The lowest level since June 2021. TK, on that name. I mean, it's real. It's not just Tesla, it's Apple as well, going into earnings at the end of this month.
And it's earnings, and I'm going to go to revenue. I'm not going to go to the earnings line and the margin line. I'm going to go to the revenue line. What's Apple's revenue out of the manufacture and particularly the sale in China? Carl Weinberg had a brilliant note out here saying China could go either way. He didn't make a prediction. He says there's too much uncertainty, but he says the certitude of a China opening, it has to be measured.
A major issue for that name right there. Futures more broadly elevated this morning by about 1/3 of 1%. We'll rip through the price action for you briefly. On the equity market, up about 13 points on the S&P. In the FX market, euro dollar 106.21, euro dollar positive 0.7%. TK, you mentioned inflation out of Europe. I think you mentioned Spain yesterday.
Yeah.
Germany as well. Take a look at France this morning. Can we get some disinflation?
Number one thing I'm watching is disinflation. Variant Perception out on Twitter, a smart one to follow, has a linkage of fertilizer prices to food prices. Fertilizer prices like lumber have cratered, and that is the signal of a potential disinflation in American food prices like what we're seeing in Europe.
Well, yield's coming down right now by another 4 basis points on a 10-year. Lisa, right now this morning, 369.39.
The data is confusing, and I will say this because when you see, for example, the weaker than expected inflation print in France, you also see stronger than expected ISM services data coming out of Europe. So this is really complicated. Perhaps we'll get some more complication at 10 a.m. today from the United States. We get December ISM manufacturing, and we also get November U.S. JOLTS data. Do we get the job openings really coming down as fast as people want, or do you start to see ongoing resilience, ongoing stickiness in how tight the labor market is, which really flies in the face of some of the weaker than expected inflation reads that we've been seeing around the world? Today, we were talking about Tesla and the weakness that we saw in those shares yesterday following weaker than expected deliverables. How much do we see that in other vehicle makers? We get U.S. vehicle sales today, including Toyota at 10, GM at 10:30. Those shares all across the board in the automaker space have been pummeled over the past 12 months. You've seen them down more than 50% if you take a look at Ford. So again, yes, Tesla in a world of hurt, but so are the other automakers as they face chip shortages as they face also people who cannot afford to the degree that they once were autos that have gone up massively in price. And at 2 p.m. we get the FOMC meeting minutes. I want to understand the terminal rate. I want to understand, John, to your point, the balance of risks. Do you start to feel like there are more Fed members concerned about hiking too fast and stymieing any kind of recovery, creating a crash too soon, given the deceleration in inflation? Do we see, I don't know, transitory light start to creep into the conversation?
The T word. You're bringing back the T word this early in 2023. Bramo, thank you. The T word back on the table, Tom.
It's very transitory. I thought the level of gloom, I really couldn't judge it yesterday being with Ian Bremmer down at Eurasia. Thank you, Dr. Bremmer, for the hospitality and smart conversation. I'm sorry, the Bramo gloom level yesterday was at a certain early New Year weight.
With an odd sprinkle of bullishness.
Yes.
Just
it was
I was struggling to make sense of it myself.
I had to think she was back.
The edge of
incoherent. And, you know, I said to Ian, I'm sitting there
Just
with
letting
Dr.
you know.
Bremmer, and Bremmer's like, is she always like this? And I said, it's the Bramo world of hurt.
Every
That's
single
what
day.
It is. It's a world of
I'm
hurt.
still here, just letting you know.
Didn't take enough time off over the holidays.
I know.
That was what it was
I had
about.
some time,
Just
and
didn't
it was
take
wonderful.
enough
It's a
time
I'm
off.
very
Bramo world
happy.
of hurt. I mean,
Committed
that's
to
what we
pain and just self-torture. Ben Lader joined us now, global market strategist at Eats. All right. Ben, thank you for being with us. Ben, you've got 3 reasons to be constructive, bullish through Q1. What are they?
So I think the inflation and interest rate shock that drove markets weaker in 2022, I think that sort of fever is breaking. We're probably going to get our 6th straight month of lower inflation in the US next week, and we're getting visibility on the top of this Fed interest rate cycle. I think the sooner that comes, the sooner that gives a little bit of relief to recession expectations and to valuations. That's one. 2, China's going for growth. That's what you're seeing with this surprisingly quick loosening up of the COVID, zero COVID policy. This is the second biggest economy in the world. If they can stabilize growth over the next quarter, and it will take a little bit of time, I think that goes a long way to reducing these global recession risks. And the third one, which you alluded to at the beginning, global equities can't do well this year unless tech does less badly. Broadly defined, it's a third of global equities. I do think earnings will be under pressure. We forget how cyclical some of these tech stocks are. And I think that's what you're seeing with Apple and sort of Tesla right now as these sort of recession concerns mount. But also remember, valuations have been absolutely crushed. And if bond yields stay well controlled here, and with valuations having turned around, I think that's where you're going to get some tech relief this year.
Ben, you pull economics into your strategy, and the key theme of your economics is we see inflation adjust from a goods disinflation over to a service sector disinflation. Give us the level of confidence in that process.
Direction of travel, absolutely. I think it's more about the speed, though. Everything we've seen so far has been, goods disinflation, easing up of supply chains. That's great. That's given you these 5 straight months of declining inflation. And now what looks like our 2nd straight month in Europe, what we need to see, and more importantly, what the Fed needs to see, is that just continuing to spread into the labor market and into services. I think if we look at the forward-looking or the coincident data, and we're going to get the JOLTS today, we're going to get the ISM prices paid data today, we're going to get the ISM employment data today. These are the types of things I'm looking at, not at this sort of backward-looking sort of mirage of sort of US sort of reported housing inflation, which basically I don't think a single person in the US actually pays. But if you look at that sort of coincident or forward-looking data, I think it's all easing. We would like to see it easing quicker, and I think you're going to get sort of more incremental data points, hopefully starting today, which gives a sort of less bad outlook. And that's all you need to see when sentiment is as depressed and as bearish as it is right now. You need a little bit of less bad news, and that's all I think all you need to take markets higher.
Well, we had a little bit less bad news yesterday and today as well. When you look at inflation easing a little bit faster than expected in the Euro region, we saw some stocks try to rally, not tech, and that's something that is notable. So what's going to send tech higher other than suppressed valuations, as you believe is necessary for a bullish outlook?
Yeah, I think tech's going to take time. I don't think tech's going to lead here. All I'm saying is you can't have tech be the drag on the market that it was last year. I think there's a shoe to drop on tech earnings, and we've started to see that with the tech revisions coming down quite hard. But I do think a lot of that gets offset by valuation. You touched on Tesla, earlier on. Coming into last year, that was on a PE of something like 130 times. Now it's on closer to sort of 25 times. I'm not saying that's the right number, but you've seen an absolute turnaround in valuations, and Tesla is still growing earnings, well into the double digits. So what is the right number? I don't know, but you've seen an absolutely dramatic turnaround. And I think if bond yields stay at these levels or come down from here, I think that is going to be a key support that was really missing last year.
You've touched on the broader signal you can take from a single name. We talked about Tesla there, Ben. Can you talk to me about Apple? What's the signal that you take from the price action there through December and into January?
I think this is the same story. These consumer discretionary was the worst performing sector last year. Investors worried about this slowdown in goods demand. Investors worried about the cost of living crisis on the consumer. Can the consumer really reach for that $40,000, $50,000, Tesla car, or that high-priced piece of Apple hardware? The market is increasingly telling you no. And I think the closer we get to recession, and this is a race between the top of the Fed cycle and recession, I think the more those concerns are just going to continue to add. And I think that's all you're seeing here.
Ben, appreciate the perspective. As always, thank you, sir. Ben Lader there of eToro. Looking ahead to some earnings a little bit later this month. Apple at the end of January going to be in big focus. So here's the challenge of this morning. And AMH has really got to pick it up in about 10 minutes' time. TK, can you explain what on earth is going on with Kevin McCarthy down in Washington, D.C.?
Some good work on this morning. A shout out to Carl Hulse, legendary at the New York Times with over 30 years of work on this. The word he used was squandered. And what we have here is a majority party squandering their first hour, their first minutes in office. It is historic. It goes back 100 years. It's going to be interesting today, and I think it does merit scrutiny into this afternoon today to see how this soap opera unravels.
This is history, right? Kevin McCarthy is the first person to not get elected House Speaker in the first round, going back to 1923, and only the second person since the Civil War. This is highly unusual. I don't understand why the market's not responding to the likelihood of a possible debt default. I mean, honestly, because this really raises the spectrum.
You take it that far.
Well, I mean, look, my job. I just start looking. No, I start looking. If you look at all the discussions, look, we're running out of time. Look at that.
We've got so much time.
Okay. Honestly, I do wonder whether this raises the specter of not being able to get stuff done. Real stuff that needs to get done this coming year.
Just for the record, you spent months laughing at British politics.
This is top tipper.
Come on, guys.
Oh, man, revenge.
Sarah Hunt of Alpine Saxon Woods coming up in the next hour. Look out for that. AMH down in D.C. is coming up next.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Well, you just heard about it. It was chaos at the Capitol. Republican Kevin McCarthy saw his longtime ambition of becoming House Speaker slipping away after a humiliating showdown with a conservative minority. In 3 rounds of balloting, McCarthy couldn't get the votes he needed to become Speaker. He'll try again today. The Federal Reserve is about to shed more light on why it's worried that strong inflation may linger. Today, the Fed will publish minutes of last month's policymakers' meeting. At the end of that meeting, Fed officials published new projections showing they expected inflation would end 2023 higher than they previously thought. More signs of easing price pressure throughout the euro area. Inflation in France unexpectedly slowed last month. Consumer prices rose 6.7% from a year earlier after record increases of 7.1% in October and November. That's a relief for European Central Bank policymakers who opted for a smaller half-point rate hike at its last meeting. China is pausing massive investments aimed at building a chip industry to compete with the U.S. Bloomberg's learned that top officials are discussing ways to move away from costly subsidies that have done little but encourage graft and American sanctions. The recent COVID outbreak has been straining Beijing's finances. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Today, is it the day I wanted to have? No. I mean, there was a lot of things we wanted to do. We wanted to repeal 87,000 IRS agents. We wanted to set up a number of investigations we had going. We wanted to notice the different committee hearings we'd have actually on the border. None of that got transpired. But if we're able to work out our differences and take this time, we'll only be stronger to be able to accomplish the things we want.
Representative Kevin McCarthy of California struggling to get the votes to become the next speaker down in Washington, D.C. On the other side of the aisle, Democrats casting their votes for Representative Hakeem Jeffries of New York.
Sad day for the House of Representatives as an institution. Sad day for democracy. We are prepared to try to find common ground with the other side of the aisle to solve problems on behalf of the American people, but we don't have a willing partner in House Republicans.
TK, a messy 24 hours for House Republicans.
Lesson in civics, I think, is what we're seeing right now. We're going to get an update here right now with Anne-Marie Horton, our Bloomberg Washington correspondent. Anne-Marie, I want to go to getting things done. Today, there's massive symbolism of the President of the United States and the gentleman from Kentucky. They'll be where I-75 and I-71 cross at that bridge between Covington and Cincinnati. You know well the Waffle House on the Kentucky side of that bridge. Anne-Marie, that's what it's about. Republicans and Democrats coming together with fat, with pork, and all that in building bridges. Can these Republicans do that a week from now, a year from now, 4 years from now?
Literally building bridges, right, Tom? The president is going to be showcasing the work he did with Republicans in getting that hard infrastructure over the line during the first, 2 years of his presidency. And he's going to be standing there with no other than Mitch McConnell, the Senate minority Republican leader, who at this point actually is the longest service Senate leader. And really, he celebrated that milestone yesterday. Very different scenario than is what is going on the other side of Congress. And to your question, what we are seeing happen in Congress, which is the fact that at this moment, it is Groundhog's Day in D.C. The House is speakerless, and there are only members-elect. Not a single individual was sworn in because the first order of business, which is largely ceremonial, is to elect a speaker. And if they cannot even decide who is going to lead their party, this foreshadows and really asks serious questions about how they're going to fund the government, how they're going to honor U.S. debt, how are they going to potentially coalesce about another Ukraine package. And it doesn't seem that this is going to be a viable Congress.
Anne-Marie, you should see the Bramo cam right now. Bramo's lit up like a torch.
Is she rolling her eyes?
No, I'm not rolling my eyes. I'm emphasizing what you're saying because you're getting to the point. Go on, Tom.
No, please. Lisa, I insist. Please, a question for Ms. Horton.
But Anne-Marie, this is exactly what a lot of people are worried about. And I was surprised that we didn't see any kind of reaction in markets. This is kind of the similar dysfunction that you saw in 2011 that led to a lot of the debt default debacle that led to the big sell-off and ultimately an agreement. However, the turmoil to get there was significant. Why is it not just going to be a repeat of that? Is there signs of hope that we're going to avoid that kind of gridlock heading into year end?
Not just significant in terms of politics, but significant in the sense that the U.S. was downgraded in 2011. We also saw this from the Republicans in 2015 when the hard right wing of the Republican Party ousted John Boehner. Now you are seeing it almost on a different level and a different scale. I think a lot of individuals in New York, because I was getting a ton of messages on the terminal from people saying, it's baked in, it'll be a show, and then they'll agree on McCarthy, it's all politics, et cetera. And maybe to a point that is. But when you wake up this morning and he's on the phones overnight, and so far you've heard from none of the 20 individuals, this was a rebellion against him, from 20 individuals he can only lose 4 if every member is present, not saying they're going to switch his vote. How are they going to get anything done down the line? This isn't just passing simple legislation. Which usually, more complex legislation, which you could see a little bit more of ideological and policy differences. This is becoming more personal.
Well, and who's leading the rebellion, right? Because Donald Trump at one point supported McCarthy. Now he's sort of on the fence, not saying anything. A lot of people are coming to ask him for his praise, he says. But I'm just curious from your perspective, is there a leader to the opposition or is it just a free-for-all?
Well, it's really members of the Freedom Caucus, and not all members of the Freedom Caucus, but a group of them. You know, notably, you have the likes of Laura Boebert and Matt Gaetz, who also yesterday sent a letter to the architect of the Capitol asking why you had Representative McCarthy moving his boxes and furniture into the Speaker's office, given the fact that he was not yet elected Speaker. So you have these rebellious individuals who a lot of it also is, it's not really about policy. They don't want to see him become Speaker of the House.
I look at this, Anne-Marie, and I think of Scalise and others who are supporting McCarthy, and yet they're also picked to be future leaders of the House. Let me pick on Jim Jordan of Western Ohio as well. Who is he taking his cues from? His electorate? From Mr. Trump, as Lisa Abramowicz mentions. Where are the cues coming from for these 20 people other than a primal, what I'm going to call, libertarian scream?
Well, they're definitely trying to make a point, and it doesn't seem like they are going to back down, even given the fact that McCarthy has really given up a lot of concessions, even making it so much easier for no confidence vote, a.k.a. being able to fire him on the spot. But when you think of the likes of Jim Jordan, obviously he was at one point a fierce rival of McCarthy, now an ally. He actually nominated him on the floor, and then a moment later, Matt Gaetz nominated Jim Jordan. But he's not going to get the 218 votes.
This is too important. What is the theology of Jim Jordan, wrestling coach of Ohio? What is his belief? Talk to our international audience about this.
Well, he is part of the ultra, what we can maybe call MAGA right of the Republican Party. But what I'm trying to paint a picture of for you, Tom, is the fact that he is not part of that rebellious group. He is actually voting for Kevin McCarthy to become Speaker. It is individuals of that rebellious group that are coalescing around him. He's ultra-conservative, but he is not going to get to 218, and everyone knows that. So then you have the likes of Scalise, and then even potentially in what the Hill is calling a breaking glass moment, maybe Patrick McHenry, which I know, Tom, you know very well.
Hey, mates, just briefly, how much longer can this go on for?
Days. I think at one point in history it went on for 2 to 3 months. But yeah, it could go on for days. They could have a similar situation today at noon and then adjourn until they figure out who is going to become Speaker. And no legislation can get done until they have a Speaker.
I mean, I know we got to go, John, but, you know, in Wikipedia, Marjorie Taylor Greene of Georgia, Wikipedia has her as an American politician, businesswoman, and far-right conspiracy theorist. She's for the gentleman trying to be Speaker. She has said to these people, you're out of your mind. I think that's just critical to line up the ducks here.
Anne-Marie's touched on this a few times in private conversations we've had and public conversations
as well. She talks to you?
Privately
she
sometimes
never talks
too.
To
gives
me
me a phone call and lets me know what she really thinks.
I haven't talked to her in like 8 months.
Anne-Marie, can you tell us how strange it is to have an individual like that being seen as the voice of reason in a moment like this?
Yeah, she's saying that they're being, obstructionists and that they need to get on board, and that she was personally not even given a concession for herself. She's not even on a committee, she says, but she's still going to be backing Kevin McCarthy. And she thinks that what her friends in her Freedom Caucus are doing is showing to the American people that they cannot govern. So you do have this very awkward moment when you have this individual who is, a QAnon individual who has delved into the conspiracy theories being the voice of reason on the right.
AMH, down in Washington. TK, what a messy time.
I learned a lot there.
I always learn a lot.
It's embarrassing. I mean, does it allude to the embarrassment of the British government process 8 months ago? Maybe. But this is worse.
Why are you prodding this?
We'll continue this in a commercial break. Need like the live timer of the conversation in the commercial break. As things get really fired up.
Do a little bit. Do the ad a little.
Wikipedia, great source, Tom. Great source.
Thank you. I went to that.
Equity's trying to bounce here. Equity futures positive by 0.4% on the S&P 500. On the Nasdaq 100 right now, up by 5 or 0.6%. One stock to watch in the pre-market right now. It's Salesforce. Here's your headline. We hired too many people leading into an economic downturn. And here come the cuts, Tom. They will cut the workforce by about 10% in a restructuring effort. The stock up in early trading, Tom, by 2.5%.
Mark Benioff with some executive turmoil wrapped around that. I'm sure it's been a huge discussion and debate there. What I would point as a stock is 3.5 standard deviations off a solid long-term trend. This is a stock that's been really on a cash flow driven, revenue building, like a ruler trend, and it has been decisively broken with this pullback.
Just a little bit more detail here. The workforce cuts will mostly come over the coming weeks. They go on to say the plan will be substantially complete, Lisa, by the end of year fiscal 2024. So 10% is a big slice of the workforce. And you just wonder, who's next and how quickly and how hard do they need to go?
Especially, look, Salesforce had been in turmoil for a while. Tom was touching on that. Massive executive departures. There's been a lot of questions around its future. There's been a huge decline in some of its valuations in the stock market. How much does this also indicate the difficulty of tech to revive itself? Because it's not just the big tech names, it's also software, some of the basic functions that companies were looking to try to gear up during the pandemic that now find themselves overvalued.
So they
for
all
the current
overbuild.
word.
No? I mean, that's all there is to it.
Oh, the tech companies, yeah. That's where the
they
excess is.
They overbuild and they're adjusting, right?
Without a doubt. There's another dimension to this as well, Tom, and you see it in the headlines coming from this release. Select real estate exits and office space reductions as well. Now, that was a feature of the pandemic. We had that big conversation. I think, Tom, do we need to renew that conversation as these companies pull back and cut?
Based on my conversations in New York, yes. There is a moment here with the whole work from home off the pandemic dynamic that's tangible. I would note the headline here, and this sounds like classic Mark Benioff, affected U.S. employees to get minimum nearly 5 months pay. That's the way Benioff shows people the door.
But it goes back to your point, John. Is this just a specific name type of situation, or is this broader? Because you see at the same time that you see tech companies pulling back on office space, you see the Morgan Stanleys and Goldman Sachs of the world saying, get back to the office right now. It's full time. It's back to where we were pre-pandemic. And you're seeing that with more and more companies. So it is a very difficult really one to parse, given that some of the layoffs in the tech companies, as well as some of the pain there, versus the resilience and the ongoing commitment to office space in other places.
Let's borrow their own language. We had too many people leading into an economic downturn. Now, for many people, they can't fire what they couldn't hire, because there are a lot of people out there that couldn't hire going into this downturn. They were trying to, they couldn't deliver on it. So really, who were the individuals, the companies that were able to beef up the workforce in the way they wanted to? That's where the excess is going to be. That's why some people are looking at the labour market data and saying, you know what, maybe this labour market data won't have that big turn lower in this downturn, because there's so many companies out there that just couldn't hire the labour they wanted to hire in the upswing.
Well, and there's a rolling boom and a rolling bust, and it's idiosyncratic. And you see the retailers, for example, and the service sector continuing to hire, not laying people off because they couldn't get anybody during the pandemic. I do wonder whether you get more office workers who get laid off in this next wave of whatever kind of downturn this is, and more resilience in some of the other service sectors.
I'm going to wait for the data. It's like the Spanish and French inflation. You just wait for the data and see. We've got Jolts is today, right?
Yeah, job openings.
It's Jolts Wednesday.
Oh, you're branding it. Jolts Wednesday.
Of course. Well, McKee would want that. Jolts Wednesday, fine, into a critical jobs report, all of it secondary to January 12th. On January 13th, we know a lot more than we know right now.
Tom, this is the issue, isn't it? We're looking at delivering, 200,000 payrolls growth again on Friday.
I haven't even looked.
Unemployment still in at around 3.5%. Wages at around 5%. You mentioned Jolts, job openings, 1.7 jobs open for every unemployed America. They're the official statistics.
200.
And then you've got these big tech companies screaming, no, we're doing something else.
I just, and at what point does that something else bleed into the broader numbers? We're not seeing it yet. Every time we get these numbers, the question is, where are all these tech layoffs that we've been reading about and all the others?
Well, they're there, but, there's been some reports that these people are losing their jobs and getting jobs quickly. I got to be careful with that. I got to, I don't.
In finance, too. Have you noticed that?
Fact.
We had that story out a couple of weeks ago about Goldman making major cuts. And then you had, HSBC were talking about sending out emails to people being laid off by other banks. Santander as well.
I missed that.
Yes,
doing the same
I saw
thing.
that. Mizuho also. I mean, honestly, just trying to beef up particularly talent in the U.S. So it isn't exactly Armageddon for the jobs picture, even in the banking and tech
It's this
sector.
odd situation where it's about who was able to attract the talent as we're really trying to beef up the staff. And dare I say, there was a hierarchy of banks that were able to attract the talent. There were other banks that weren't able to. Then these big banks that were able to are doing the cuts. And these other banks that want to beef up in certain areas, certain regions, dare I say, lower down the hierarchy for certain individuals, Santander, HSBC. That's where the demand is.
This isn't a picture of pain for the labour market by any means.
A picture of pain.
A picture of pain.
Picture of pain.
It's about where we're going to end up.
Hurt.
And when we go back to that word cumulative tightening, right?
There you go.
From Vice Chair Brainerd. Ultimately, we're still trying to answer that question. How long is the lag from the cumulative tightening we've already seen, and when will it show up? How short is the lag as well? I mean, we've got to work all these things out in the year ahead. And Tom, it's a guessing game. Let's be clear about that. It is a guessing game for these central bankers.
I can't emphasize enough how all my thinking over the holidays, including a 10.96% rise in the price of champagne, is colored by the pandemic. We're still.
I'm done.
Lisa, do you
I'm
agree?
Done. You can't.
I'm done.
We're
still working. Better anyway.
We're talking about job cuts. He's talking about the cost of champagne.
I'll just bring it back to the job cuts for one. Bill Dudley yesterday, you did speak to Tom. He puts the number at sub 100,000 jobs being created for several jobs prints consecutively to get where we need to get to limit some of the wage pressure.
Conversation finished.
I thought that was good. It was a good conversation, Keller.
I think this is important. The pandemic is the ramifications of the. How can you have 11% champagne?
You're killing me. I know you so well. You're on the edge of laughing. I can see it in your face. It's ridiculous. Euro dollar right now. 106.09. Where are we? We're positive 0.6%.
God, the Bollinger, like what Jamie serves in Davos? I can't believe what that bottle's got.
Behave. Tom talking about the disinflation across Europe. France joining the club this morning. Downside surprise there. Saw it in Germany yesterday as well. Nomura's Jordan Rochester reckons we can hit 110 on euro dollar by the end of the month, saying this. Tom, it has often been the case in the first few days of the new year, a new narrative prevails, and euro suffers from negative seasonality too. But we suspect euro will continue to climb higher in the weeks ahead, and we remain long euro dollar.
Jordan Rochester, huge value to Bloomberg surveillance last year, and he starts strong this year with us as well. Jordan, I'm going to cut to the chase. The first thing I looked at was ADXY, the Pacific Rim, but I want to bring it over to your insight on euro as well. Is the weak dollar trend intact, led by strong euro?
Well, yesterday, Tom, and Happy New Year, everybody. It was a pretty tough day for that euro long. We saw a big move, over 1%, much bigger than a normal January move for euro. In fact, it's been similar to the entire monthly move of euro in January in previous years. It just tells you that volatility was alive last year, and it's still alive in the first few trading days of this year. Low liquidity, people dusting off their holiday emails, and also putting fresh capital to work. And as you mentioned, there's that negative seasonality. So a 64% hit ratio since 1980, euro dollar has headed lower, on average around 1.3%. So we're currently betting on the 36% historical chance that euro goes higher for a number of reasons. The first one was proven today, which is, I think the European growth data, it's going to point towards recession, but it's not going to be as bad as what people think. We had the PMIs revised up this morning for the euro area, and I think the reopening in China will really help boost the euro area economy as well. As we're also seeing gas prices, natural gas, electricity prices, much lower with the warmer weather. The ski season has been awful, but that's been fantastic for industry, looking at much lower levels of input costs and therefore boosting production. So we're having a growth story. And then yesterday was the weird one. We had the Northwest Wine German numbers. That signaled that German CPI would come in weak. We've now had the French numbers suggesting the same. So we'll get euro inflation later this week. It's going to be weaker than what was previously thought. That kind of means the ECB, super hawkish in December, that did boost euros slightly. Perhaps they won't need to be as hawkish as what the market thinks this year, is the message from the inflation data. Just one data point, and the growth numbers might offset that. But there's two factors going on here. Growth up, inflation down. That revises up your real GDP estimate for the euro area in some respects. And therefore, I think euro can stay supported in January.
How much does your 110 target by the end of January hinge on the weather?
Well, the weather's already baked in. So October, November, and we had that cold snap in December, but now we're back into a warm snap. So we've already got the story of Germany having blackouts. That's kind of gone to the side. So it's unlikely that we'll run out of gas. Next winter could be a bigger problem. But what we have seen is that Germany has just switched to coal burning. And so that has really allowed for the gas story to weaken as a problem for Euro. So yes, if some amazing blizzard came along, that could be a factor for industry. But I don't see it in the forecast right now.
Jordan, where's the ECB fit into this call?
It's been a tough one to use an ECB view and put that directly onto Euro. It's been quite frivolous, actually, if you kept doing that last year, because we're trading a stagflation story when it comes to frameworks for foreign exchange. So ECB, yes, they'll be hawkish. And that will boost European yields. We're already seeing portfolio inflows into European government bonds for the first time in a long time. So that's going to boost Euro. I think on the ECB side, by raising rates, that's going to knock growth, though. So those two forces offset each other probably. I guess, John, we could just bring it all back to the Fed. If the Fed pauses, as we think they will, and if they look to cut rates later this year, which we think they will as well, that'll keep Eurodollar supported no matter what the ECB do.
You can't see this on radio. Is he wearing an Aston Villa tie just to harass
I actually
me?
think he might be.
I think he might be. I think it's an Aston Villa tie.
That might be,
this
guys.
morning.
Yeah, that's right.
Oh, wow, he actually is.
This is too much.
With the team emblem on as well.
It's just bad form.
Why am I wearing a tie, John? Can you remind us all?
Well, you tell me.
I watched the highlights of the Tots Aston Villa game. Is Aston Villa that good or is Tottenham that bad, Jordan? Help me.
A mixture of the two. It's been one of the worst runs for Tottenham in the league since 1988. You conceded more than 2 goals in each game for 7 games in a row. That hasn't been done since 1988. For Villa, we've got a new manager, and things look to be on the up. We've had a good start.
We should do a podcast with Jordan.
We should.
Never mind foreign exchange.
You know, yeah, I like it.
Jordan Rochester, thank you.
that's
Over
great.
at Nomura with an FX call and a troll of anyone that supports Tottenham. I think isn't that a beautiful thing? Is he allowed back on?
This is going to start a new trend.
Is he allowed back on?
You know, Steve Major's going to show up with a West Ham tie on.
Same colours.
Oh, is it?
You can wear that sort of, that.
Crystal Palace Tots today. Do you know Crystal Palace, they now play in the same arena as Rochester, which I think is good.
The same arena as Rochester?
Rochester FC, yeah.
I didn't know that.
Yeah,
Are you making things up?
Yeah, they are. 8 p.m.
Are you making things up?
No.
It's like, yeah.
I mean, I don't even follow this that
Crystal
much anymore.
Palace.
What are you talking about?
They're playing today. I don't get it. The FA Cup is this weekend. What's the FA Cup?
We haven't got time to do this.
Okay, thank you.
We don't. And Rita Sen's coming up from Energy Aspects. Crude's at 74.90.
She's not going to wear an Aston Villa tie.
Down 2.6%.
Keeping you up to date with the news from around the world with the first word, I'm Lisa Mateo. It's back to the drawing board for Republican lawmakers today in another attempt to elect a House Speaker. After 3 rounds of balloting, Kevin McCarthy was unable to gain the majority of votes from his own party. It's the first time since 1923 and only the second time since the Civil War that a House Speaker wasn't elected on the first ballot. The European Union is moving toward requiring COVID tests for travelers from China. EU health advisors have agreed on a draft opinion that includes masking and pre-flight testing requirements. Several European countries, including Italy and Spain, have already imposed testing rules on flights from China. FTX founder Sam Bankman-Fried now faces a trial in October on the collapse of his crypto empire. In a court in Manhattan, Bankman-Fried pleaded not guilty to criminal charges. U.S. prosecutors say they expect to produce all the evidence for the case in the next 4 weeks. Job cuts are on the way at Salesforce. The cloud-based software company says it plans to cut about 10% of its staff in a restructuring. As of last October, Salesforce employed almost 80,000 people. The company says it hired too many employees leading into the economic downturn. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
We still have relatively tight commodity markets, and if China reopens forcefully and fast, you could see a bit of a replay of the commodity-led inflation which we had coming into this year or the last year. So to some extent, we're kind of a bit more worried that it could reignite the commodity strength.
That is a risk coming into 23. That was the brilliant Christian Müller-Glissman there, the Managing Director and Portfolio Strategist over at Goldman Sachs. Here's the price action for you in the equity market on the S&P and the Nasdaq 100. The S&P advancing by 0.4, a lift in the Nasdaq as well. Yields look like this, and I think this is the one to watch to start the year. Yields down aggressively yesterday, down again today. We're down by 5 or 6 basis points to 368. And a team here at Bloomberg, Tom, says this is the strongest start for Treasuries going back to 2001, the strongest New Year start to the Treasury market.
It's worth following. I mean, there's no question about that. The yield dynamics have sort of been boring. The real yield, 1.42%, not giving me much information. But the yield lift we had the end of December, we're not halfway back from that. I mean, I just want to make clear, that was a hell of a yield lift.
Well, just for the record, I think we were about 200 basis points south of where we are right now. This time 12 months ago, and the equity market was at all-time highs a little more than a year ago as well. On the commodity market, take a look at this, Tom. The latest reporting from the team here at Bloomberg. Chinese bureaucrats are discussing plans to resume some imports of Australian coal after a more than 2-year ban. So, two-pronged story here. One, relations perhaps improving between China and Australia. That's point one. Point two, China clearly needs the commodities as they reopen, don't they?
In our conversation with Kevin Rudd yesterday, the former Prime Minister of Australia, he will be the Australian ambassador to the United States, spoke to that. They've got to get along. I mean, that's all. The geography says so.
Are we going to see a different approach from the Chinese Foreign Ministry, from leadership there? Got maybe a subtle hint of that from the new Foreign Minister in the last couple of days?
I will defer to Enda Curran and other wiser than me, but the clear tone I got yesterday from Bremer was, geez, awfully powerful, even if he's got a tough road ahead.
Hey, one to watch. Look, they're trying to reopen that economy. They're trying to do it quickly. Clearly, sickness is on the rise. Once they get through that, if they can get through that quickly, we've got to focus on a big commodity story, Tom, through 2023.
Your briefing today on oil and coal. Amrita Sen joins us, Director of Research, Energy Aspects. Of course, they're looking at all of the different hydrocarbons, including the grizzly coal. I'm going to look, Amrita, right now at how coal links into oil. Is there a substitution effect? If Germany uses coal, if China uses coal, does that adjust Brent crude price?
No, Tom, thankfully not. That'd be yet another variable. Of course, it impacts gas hugely. And yeah, look, when we've had gas prices surge, we have seen in Europe, for instance, coal usage go up a lot. And at the margin, we've obviously seen oil usage go up a lot as well. But no, there isn't any direct link simply because, oil is barely used in power generation these days.
Is the Amrita Sen microeconomics in place for oil to surge? People talking about Brent 80. 90, 100, dare I say, higher as well. Is that set up in place here at the beginning of the year?
I'd say the beginning of the year, no, but I really do think the second half of the year, and particularly if China opens up in the way we are, now we are kind of hearing headlines from them around the reopening scale, we've tended to forget what we saw in the West, right? It took us 2 years to get over the pent-up demand in terms of airline travel, in terms of car travels, or the mileage driven that we've seen. And I keep saying this, particularly for jet, it's a multiplier effect. When China reopens, other parts of the world will also, people from other parts of the world will also want to go to China. And China is so connected to the rest of Asia, be it Korea, Thailand, Vietnam, Philippines, all these countries, they have huge trade relationships with China, 25 to 30% tourism, or just petrochemical exports linked to China. So we are going to see some big demand numbers. The problem now, Tom, is that we've seen these big freeze-offs in the US, and that's meant that the crude balance has actually weakened. We've seen so many refineries having to forcefully shut down because of the cold. That's lost us crude demand. So that's why we are on a softer footing. Then it kind of turns into seasonal turnaround season. So it's a few more weeks of softness, I would think.
Amrita, forgive the pun, but what's the canary in the coal mine when it comes to the reopening of China, given the fact that there are a whole host of different energy sources? Stop playing the table, Tom. I know is kind of a terrible pun, but what source of energy will we see the first pickup in demand that will represent the next phase of China's reopening and the effect on energy markets?
That's a great question because, you guys were saying this just now as well. When China does reopen, they will need all energy products, right? It's not just going to be oil. Oil stocks aren't particularly high, so we should see them come out and buy crude oil. Probably, if not this cycle, definitely from next cycle onwards, they are going to need coal and gas as well. So I would genuinely say all three of those. I think metals, you've already seen them buy. If anything, I think energy or energy imports should outperform the other commodities because right now, with the reopening, the focus shifts back to consumers, which is kind of, again, goes directly into energy consumption as opposed to metals, which was more infrastructure driven. That happened last year.
Some people push back and they say, well, China has spent the past couple of years stockpiling crude, stockpiling energy sources, and they're not going to need an excess in supplies, even if they do reopen in full, at least not for a very long time. Do you have any sense, Amrita, of how significant those stockpiles of energy sources are in China?
Absolutely. Look, we track stockpiles in China to our best ability on a daily basis. And I think this is a big misnomer. Let's talk about oil, for instance. China's oil stocks have been rising, for sure. But over the course of last year, they've been drawing down stocks on a consistent basis. China was importing barely 9 million barrels per day instead of 11 million barrels per day. So that stockpiling took place in 2020, 2021, not last year. We've destocked enough in China for them to be at the level that they require for their days of cover, where now, as they reopen, they do need to buy again.
I've got Amrita Sen, I've got LNG moving here, moving there. Javier Blas of Bloomberg out with analysis of LNG in Japan today as well. Just a simple question with all your expertise. Is the United States energy independent?
It's definitely more independent than it used to be. Look, the U.S. still imports some oil. And simply that's to do with location, the ability of certain refiners to run certain crudes. But look, yes, I mean, it's exporting natural gas now. It does export well over 3 million barrels per day of crude right now. There's still global linkages, right? So that's where I don't like to use the word independence, because Brent crude is still the biggest driver of the gasoline that you are buying at the pump, right? So it's not an island. And therefore, yes, it's independent in the sense that it's exporting a lot more products. It's still a net importer of certain products. But at the end of the day, the global linkages haven't broken down just because of the way the refining system is set up.
Just quickly, Amrita, best guess for where you think crude's going to end up. Citi at Q4 23 has crude at 76. I've got Goldman at 110. I've got other banks with triple digits as well. Where are you at?
I'd be triple digits as well. And I think, again, people are underestimating China's reopening and the multiplier effect on demand. Again, basic 101 economics that it's going to have on the world economy. Yes, bad news for inflation, but it is definitely something to watch out for.
Amrita Sen, thank you, of Energy Aspects, with another triple-digit crude call, Tom, for year-end 2023.
Yeah, well, there it is, and it's. Can we say it's in the zeitgeist? I think it's safe to say
part of the
most
conversation,
people are saying that the lift is there. And to Ed Morse's point, he shocked people with an $80 call, $70 call, and that's what we had. I have real hesitancy in announcing that we're going to move to $100 a barrel. All my radar's up if someone says that.
That's a $30-something spread between the low and the high estimate for year-end. And Rita Sen there, Lisa, I think was pretty clear. She thinks people are underestimating the impact, the force that China's reopening is going to have through this economy.
And the multiplier impact was the one that really struck me. Not only people in China moving around, but people going to China and visiting, just the incredible commerce that gets rejiggered and reignited if China fully reopens. But you raised this question yesterday, John, and this I think is a really important point. Given all of the shifts culturally in China, what does the new reopening look like in terms of the international commerce and travel? Still remains to be seen.
Oh, I'm asking the same question. I think we're both asking this question. Where does the demand show up? And Rita's saying it'll show up in a commodity market. Okay, I want to know where the revenge spend is going to take place. Do they go abroad in the same way they might have done 3 years ago? Or does it get spent at home? You're smiling. What are you thinking about?
Revenge spend.
Have you been revenge spending?
Revenge spend can be on Madison at 63rd. It can be up a little bit towards the 70s.
Are they going to fly into New York to do that? Or are they going to spend it at
Well, no,
home?
that's a hard matter. Seriously, do the Chinese tourists return to Europe as well?
Yeah, big question too. Sarah Hunt's coming up of Alpine Saxon Woods.
There are a lot of real fundamental issues that are going to be pulling down inflation.
Next quarter or two, we stay in this nominal GDP dwarfing real GDP environment, right, driven by still elevated inflation.
You can't ignore the shorter term data. You have to take it all into account.
I think we see equities down in the near term, possibly recovering towards the end of the year.
What's different this time, I think, is that if we have a recession, it's going to be a Fed-induced recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Kicking off 2023 with a focus on the labour market in America. Live from New York City this morning. Good morning, good morning. For our audience worldwide on TV and radio, this is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Breaking news in the last 30 minutes or so, Tom. Salesforce to cut 10% of jobs.
Maybe following on from other tech companies, I think it has been signaled with the executive turmoil under Mr. Benioff at Salesforce. They give out 5 months pay minimum to the people shown at the door. There is not the zeitgeist, but a little bit of a flurry out there that people exiting big tech who overbuilt are finding jobs. I don't know if that's true or not, but I would suggest it's a fully employed America for subsets. Torsten Slok, moments ago at Apollo, says prime age workers are pretty much employed. It's the old people and the young people that haven't come back to work.
The statement from leadership over at Salesforce, I think, tells you the story pretty clearly, Bramo. As our revenue accelerated through the pandemic, we hired too many people, leading into this economic downturn we're now facing, and the leadership say they take full responsibility for that.
And there weren't that many industries that really built up their entire employment force during the pandemic. It was big tech and it was the banking system. And those are the places where you're starting to see layoffs, which raises a question. How idiosyncratic is this, or how representative of the broader labor market? And to Tom's point, there still is an inherent tightness in the structure that keeps getting represented in the numbers.
That's Salesforce. Let's talk Tesla and Apple. And we can maybe talk about Tesla a little bit later and start with Apple right now. Dan Ives of Wedbush, well known, some might call him Permabull of this name, lowers his price target from 200 to 175 this morning. This is what Dan has to say. It reflects a more base case valuation in an uncertain environment as some demand headwinds start to creep into the Cupertino growth story. Tommy goes on to say that Apple remains our favourite tech name. We maintain our outperform rating, but certainly had a difficult December. And it's had a difficult start to the year as well.
175 up 39, make it 40% is what the shift is, if you will, from being hugely optimistic. I would suggest in the 14 times over the year that we called not so much for the death of Apple, but the stumble of Apple, you've been wrong. And the heart of the matter is new product. People are always out there, the fanboys, looking for the new product. Do they need new product, or do they just need to sell these over vet bills? Well, you should see it. I mean, they're loving it.
Well, I will say this. Dan Ives actually talks about the stability of the iPhone sales, but says that Apple appears to be cutting back on some orders around Macs, iPads, and AirPods over the coming quarters to reflect, and this to me is the most important point, to reflect a softer consumer backdrop. And this is the real issue.
That was reported by Nikkei yesterday, and I think contributed to the losses we had, Tom, in yesterday's session.
Yeah, there's no question about it. What I would do is look at the surveys that is statistically valid of counting the number of lost AirPod thingy ear things in the house. Try to get to double digits. You can do it.
How many have you lost?
Oh, I don't know. Under the couch alone, there's got to be 4.
Because you can find the case, but you can't find the...
Now you can find it. You can
ridiculous.
buy an individual one. You bring the case in and you can...
Oh, they'll give you a spare?
You get a spare one.
I didn't know that.
Yeah, I didn't know that either. Mike, I looked at it and said, what did I buy?
How much they charge for that?
A lot is the answer. The
so you might as well just buy a new set.
They're ridiculous. I don't have them. You know, do you have?
I've seen you.
Do you use AirPods?
No, but some in the family do. The worst is when it goes through the wash. But I'll just leave it there.
They put it through the wash.
Do they survive?
No.
Do they survive through the wash?
That's how you get upgrades, Tom. You just put them through the wash on accident, and then
she goes in and she goes, I'm sorry, it went through the wash. They give Lisa.
That's how it works. Yeah. Apple up by 0.6% this morning, trying to bounce, not much of a bounce. I'll bring you the broader price action in the equity market, shaping up as follows on the S&P 500. Futures up by just 1/3%. The one thing that continues from yesterday is this move lower in bond yields, down another 6 basis points, Tom, on a 10-year, 367.53, and adding to the move low we saw in yesterday's session.
Yeah, I mean, the yield story's there. Technically, it's not a big deal yet, but it's moving in that direction. And I would suggest the market is waiting on the data, ample data today, including ISM. You're big on ISM. Is this a big deal today?
Oh, without a doubt. We need a read.
Usually it's the first of the year.
Need a read on this economy. Bramo, we'll get that read on this economy today and through much of this week.
Today at 10 a.m., December ISM manufacturing. That will definitely be interesting to see whether it actually picks up a little bit after dipping a little bit earlier. But I'm also watching at that same time November U.S. JOLTS data, the job openings. How much do we get a sense of a very tight labor market starting to loosen just a little bit, given the dynamic that Tom was talking about with older and younger workers really staying out of the workforce? Who is going to fill all the roles, aside from in big tech necessarily and certain banking sectors? Who's going to fill all these roles that still are very much in demand? Today, we also get U.S. vehicle sales with Toyota at 10 a.m., GM at 10:30. Honda also coming out. Ford is going to be tomorrow. So far, in the past 12 months, the shares of these companies have been absolutely hammered. Ford down more than 50%. It isn't just Tesla. Do we start to see an increase in just the supply chains easing after China's reopening? And what about demand, given how high pricing is and how difficult it is to get financing at rates comparable to about a year ago? And at 2 p.m., we get Fed meeting minutes. Do we get a sense of the terminal rate? Do we get a sense of the balance of risks, whether people are getting more on the Lael Brainerd train and getting concerned about torpedoing any kind of momentum sooner? How much are we seeing peaking out at 5% of that Fed funds rate being baked into Fed expectations? Do they move away from that, John? I just think any indication of what was underpinning a meeting that seemed to be a real shift in tone for a Federal Reserve will give some indication of how they're going to play this balance of risks.
Looking for that detail, that clarity a little bit later this afternoon. Lisa, thank you. Joining us now, Sarah Hunt, Chief Market Strategist at Alpine Saxon Wood. Sarah, always wonderful to catch up with you. A happy new year to you and the team. I want to start with two names and ask you for the broader signal you take away from the price action in those two names. Apple is at 18 months lows. Tesla started the year yesterday with its biggest one-day drop going back to September 2020. Sarah, is there any broader signal out of those two names right now?
Well, good morning and Happy New Year. Thank you for having me this morning. It's interesting. I think that there are specific things going on with Tesla. Apple, I would say, has something to do with people have been looking for that as the last shoe to drop on the technology side. But if you look at how much it was down through all of that, it actually was down quite a bit more than it had been up until December. So I think to the argument that the market needs to get to everything to go down before it can start to figure out where it's going next, that might be a good sign if you look at it just in those terms. On Tesla's side, I think you have a couple of things going on between both production numbers, the concern about financing, the concern about the consumer, and the cold snap that sort of had some issue with electric vehicles. There could be a lot going on that's not so much about the broader market than it is about Tesla specifically.
Sarah, if we get disinflation, what do equities do?
Well, you could argue that we had disinflation when rates were at zero for a while, right? So equities did pretty well in that scenario. I think the real question is, where do rates go? Because right now, equities and rates are really, I think that's the biggest issue for equities right now, is what's going on in the bond market. And I think that that's when I say it's going to be a difficult year this year, it doesn't necessarily mean it has to be down. It just means that it's going to be volatile. And I think all the data that's coming back and forth is going to be part of that. So I don't know that disinflation worries people for a lot of other reasons, because it makes debt more expensive and some other things. But for equity markets in and of themselves, a lack of inflation was not a bad backdrop for them for the last decade.
What about commodities for 2023? This was the best trade for 2022. Do you see that continuing, or do you see there being a sort of right sizing with respect to the actual commodity performance and energy equities?
Well, it's interesting. I think, listening to Anne-Marie Descend before, I agree on the energy side. I think that energy, as China opens up, energy is probably going to be the biggest beneficiary on the commodity side. It's a real question what happens as China opens up with other commodities. And I think there's a real question in terms of where are we going to go globally? Are we going to be building more things? Or as we get back to moving, are we just going to be moving people around more? So I think the material question is up in the air at the moment, but anything that's related to energy, and that includes coal as well, and even coal to the steelmaking side too. I think there was a story this morning on the Bloomberg that China was looking back to Australia for coal again. I think that all of those things are going to be in more demand because you've just had such a slowdown in China because of their COVID-0 policy. I think it's hard to see that group not responding well to any kind of opening, even if it's uneven.
You think we could get a repeat of the leadership of last year, this year as well, then, Sarah, in the energy names on the S&P?
Well, I think that energy, yes, it had a great year last year, but it's also taken a real hit in the last couple of days. If you look at some of the energy names, they've gone on sale. You've got, down 8-9% in the last couple of days because oil dropped, and we've gotten some very warm weather, and natural gas prices dropped in the U.S. So I think that there's some real opportunity there because I think longer term, we've got a longer tail on hydrocarbons than I think the market was pricing in, even as shortly as a couple of years ago. So I think those stocks have a real chance to perform for a couple of years, just because there's been so little investment, and I think commodity prices should strengthen and stay fairly strong.
Sarah Hunt of Alpine Saxon Woods. Always great to hear from you, Sarah. Thank you. Another voice, together with Amrita Sen, talking up higher crude prices, Tom, through the year ahead off the back of this China reopening story.
The China reopening is the heart of the matter. There's no question about it, how it redounds on everyone out there, including Pacific Ring. First chart I looked at today was Asia DXY, the JP Morgan series of the currencies on the Pacific Rim, including China, ex-Japan. And guess what? The trend, I can't say it's there, but maybe finally we have a weak dollar trend in place off that reopening.
So we did pandemic economics in 2020. Lisa, we did pandemic economics in 2021. In 2022, are we going to do pandemic economics again in 2023?
This is the key question.
This is it, right?
This is it.
Well, because China is reopening, then we will do pandemic economics to a degree. The war in Ukraine, though, to me, really raises a question when you start talking about energy, whether we start to see cold weather start to change the disinflation story, right? How much of the disinflation that we're seeing right now is an energy story directly that could get offset by a China reopening, weather, and any other exogenous development?
Warmer in New York today.
It is warm.
That?
It's super warm. Yeah.
It's warmer in Europe.
I dropped the scarf.
Yeah, well, you're actually saying it's warm?
It was warmer, yeah.
No, wait.
Warmer or actually warm?
Folks,
this is actually warm.
Well, it's a
he
relative
doesn't
game,
wear
isn't
a
it?
coat.
Temperature is a relative game, isn't it?
You
always get annoyed.
You just want
It's not that cold.
You want to pretend you're in London. You don't even wear a coat some days.
I wear a coat.
A
little thin, like city coat.
It's just like a nice Paul Smith
It's
overcoat.
what lads in the city wear.
Back to the shopping channel.
LL Bean, Freeport, Maine. You'll love it.
Can you imagine seeing him in that?
John Farrow and LL Bean with those boots up to his knees.
In and out of the car. That's all it's about. Just get out the back of the car, come into the office.
A real nature man over here.
To the car. And I'm not looking to go exploring through Central Park.
Do you wear the Patagonia? Do you wear the vest that's very in right now?
The Midtown uniform.
Midtown uniform.
Can you see me in the Midtown uniform? I've got so many things to say about the Midtown uniform.
We'll come back.
This is my message to Gen Z. If you want a better chance of getting a promotion,
Mike Wilson wears
drop the Midtown uniform.
Yeah, Mike Wilson.
Just drop it.
Mike Wilson is so powerful. He wears the Midtown uniform.
I don't think Mike Wilson wears the Midtown uniform.
Well,
brought to you by AC Milan.
Mike Wilson's going to join us in the next hour of Morgan Stanley in about
about
45
Patagonia.
minutes. I've no doubt you will. From New York, this is Bloomberg.
Fashion and finance here on Surveillance, keeping you up to date with news from around the world with the first word. I'm Lisa Mateo. Well, it was chaos at the Capitol. Republican Kevin McCarthy saw his longtime ambition of becoming House Speaker slipping away after a humiliating showdown with a conservative minority. In 3 rounds of balloting, McCarthy couldn't get the votes he needed to become Speaker. He'll try again today. The Federal Reserve is about to shed more light on why it's worried strong inflation may linger. Today, the Fed will publish minutes of last month's policymakers meeting. At the end of that meeting, Fed officials published new projections showing that they expected inflation would end 2023 higher than they previously thought. More signs of easing price pressure throughout the euro area. Inflation in France unexpectedly slowed last month. Consumer prices rose 6.7% from a year earlier after record increases of 7.1% in October and November. That's a relief for European Central Bank policymakers who opted for a smaller half-point rate hike after its last meeting. Russia has raised the death toll from a Ukrainian rocket attack on its troops New Year's Day. The Kremlin now says 89 soldiers were killed, the largest such loss it has acknowledged in the war. It blamed the soldiers' mobile phone use for exposing their location. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
I rise to nominate Hakeem Jeffries for unity in Congress.
Has been recognized.
For unity in Congress and progress in our country, Democrats are united behind Hakeem Jeffries. I recommend Hakeem Jeffries as our Speaker. Thank you, Madam Clerk.
Theatre down in Washington, D.C. That was Representative Pete Aguilar of California. Live from New York is the price action for you to kick off trading this morning. We're on Wednesday. Losing track. Wednesday morning, good morning. Equity futures up 1/3 on the S&P 500. We look a little something like this on the Nasdaq, pushing higher as well. Yields coming down by 6 basis points on a 10-year. Yields right now at about 367. Yields adding to the move lower in yesterday's session, and the team here at Bloomberg that tracks all this data and all that good stuff. This is the strongest New Year start, Bramo, going all the way back to 2001 for Treasuries.
Okay, this actually really bothered me. I have to be honest. Can you say that with one day? But it has continued 2 days. But I wonder if this is just basically...
It's financial TV.
I mean, honestly, but this is exactly it. I saw this and I thought, really, one day? And it's like the best day since 2021 or 2001. How much are people trying to just basically get out ahead of the entire year's projections, go into bonds, and then the trade's going to be over, and then we're going to flip the script?
Why are you so angry about this?
February. I don't know. It seemed ridiculous.
To James Harai and Michael McKenzie, who wrote that story, thank you. I thought that was interesting.
I think that it's
Would you
great
like to
that they wrote
apologise
that.
to them?
No, but I think
Okay.
that it's good that they wrote it just to give us size and scope. It's nice.
Is she done?
I
yes. You know,
I'm being escorted out.
Why are you so angry about this?
I just felt like it sort of doesn't tell us that much, except perhaps the trade is completely getting used up right away in the first day of the year.
Okay. Like that's the move for the year.
But it's getting ahead of the year's move. I'm not
She's
saying
got a pilot in works, day trading with Bramo.
10-year.
You know.
367.53. Is that coming out with my Zen meditation?
It's not, it's not there. It's under debate, is how I'm going to put it. Not under debate is
Group deal.
Exactly. Package deal.
Anne-Marie Horton killed it in the last hour on the craziness of Washington. Anne-Marie, I'm going to go the other way. We mentioned Biden and McConnell in Kentucky and Ohio today. There was that moment where Speaker Pelosi, Nancy Pelosi of Baltimore and California, voted for Mr. Jeffries. It's the way democracy is supposed to be. What are we actually going to see today from the other party? What is actually going to occur this afternoon? What should we watch for from the Republicans?
Well, you can bet the Democrats, as you mentioned, former Speaker Pelosi, really, or I guess she's current, given the fact that we don't have a working 118th Congress, but they're going to hold the line. And what you're going to see from the Republicans at this moment is no one has yet given in to McCarthy. So at this moment, yesterday, his final tally, he actually lost another vote, one that he didn't in the first and the second. So 20 individuals. This isn't just a group of 5 or 6 people anymore. These are 20 people he needs to negotiate with. So what you want to see today potentially for his path is whether or not he can make any progress on bringing that number down. Remember, if all members are present, he needs 218 votes.
Mike Allen, his morning note at Axios, Anne-Marie, talks about MAGA, ultra MAGA, establishment, and moderates. Which of those 4 is Mr. McCarthy?
He would be, well, it's an interesting question, right? Because many would say that he, depends who you ask, really, because you'll have some on the ultra MAGA side who really feels like he's sold himself out just to climb the political ladder because of his ambitions. But you have some who, on the moderate side, would also say that, you know, especially during the January 6th, following that insurrection and wanting to shore up where his place was in the Republican Party, really showed his fealty to the former president. You know, we've all seen those pictures of him making that pilgrimage down to Mar-a-Lago. But right now what you could say is he is one of these centrists, and what he wants to do is be able to just do the politicking of the Congress and be able to be Speaker of the House. That is really his aim, which is why the ultra MAGA have an issue with him, even though he was blessed to be Speaker by the former president, because ideology-wise, they do not match up.
MH, have the people who are voting ultimately against Kevin McCarthy articulated what they do want?
Well, there's really not much left for Kevin McCarthy to give him, right? He made one of the biggest concessions, which is basically saying that 5 individuals, 5 lawmakers, a very small group, could call for no confidence vote. Jonathan, you know how no confidence votes work, especially. We've seen a lot of this play out during the backbenchers with the Tories, which ended up leading to a referendum. A lot of what is going on here actually reminds me of, for the international audience, what had happened in the United Kingdom. But potentially one concession could be making it to one only individual lawmaker can call for that snap vote, potentially giving a little bit more leeway to some of these ultra MAGA individuals to have more of a say on certain committees. But again, it doesn't seem like there's any concession besides McCarthy exiting and then them coalescing around another individual. And it's become personal.
And Marie, what is the drama that we've seen in the House Republican Party say about what we can expect in 2024?
I think what you can expect is this is going to be a big fight in terms of the presidential election for 2024, because this is a very divided Congress, but before we get to 2024, Lisa, what does this say about the U.S. being able to pay its debts, not come onto the brink of a government shutdown, not coming onto the brink of falling off a cliff and being downgraded like it was in 2011, and ultimately they had to strike a deal with the Obama administration in terms of cutting funding by $2 trillion over the course of the next decade. This foreshadows how difficult some of these very important and big policy negotiations are going to be over the course of the next 12 months.
Anne-Marie, down in Washington, AMH will catch up with you a little bit later this morning. Looking forward to doing so. Thank you. You know who's absolutely untouched by all of this? Governor Ron DeSantis, in his inauguration speech yesterday. Pretty fiery stuff, Tom. In Tallahassee, had this to say. He criticised the floundering federal establishment in Washington, D.C. He singled out the US government's inflationary spending binge. He went on to say the current administration, quote, recklessly facilitated open borders, making a mockery of the rule of law. Finish with this one, Tom. Florida is proof positive that we, the people, are not destined for failure.
So he parachutes in British advice on what to do. He's got to move from Florida out through the process of this ridiculously long American presidential dance.
When does that start for him?
How does he do that?
When does that start for him, Tom?
No. It's
immediately?
Yeah, he's hiring people, figuring out how to raise all that money, to spend all that money. But seriously, how do you in the modern day, you know, McKinley sat on the porch in Ohio 120 years ago. He never campaigned. It's gone. You've got a unique, I think, far superior effort in the United Kingdom. What's the process, Lisa, to how DeSantis expands his reach? I have no clue.
Especially if we do get, and I know that you guys will mock me for this, but the whole debt default question later this year, if there is a problem with this, how does that color his view of trying to...
Put the surveillance cork in my mouth.
For the record,
I'm going to go...
I'm not saying we won't be discussing the potential of that, the risk of one.
I'm saying from a political perspective... Sure. You're humoring me. From a political perspective, how toxic is this function? Oh, Tom, come on.
We should get a Bollinger Court for you. Just a Bollinger one. We should have one on set.
Yeah, they should have.
You've got a minute. You've got a minute. It's all yours.
But in all seriousness, I wonder how much the dysfunction that you're seeing in the House threatens the political prospects of people who are trying to be leaders in the Republican Party. Can they get the MAGA, the ultra MAGA, and the centrists together in a way that is cohesive, where you can actually get policy done? And if you can't, what does that do to 2024?
Well, Tom mentioned an individual that never campaigned. And I think a lot of people, neutral observers, would look at the last campaign and say the current president barely campaigned. He just allowed people to have a vote on whether they wanted a second term of President Trump or not. I think you can make the argument, if Ron DeSantis is going to be the candidate for the Republicans, that the current president, Tom, is going to have to do something he didn't do much of in the last presidential race, and that's campaign.
Yeah, you're really on a streak today. You said something an hour ago that was brilliant. Again, everybody's off the radar here with the GOP issues in the House, with the real question of January is, what will this sitting president do? I'm sorry, it's fallen to the way. I'm sure they're happy it's fallen to the wayside.
Yeah. We were told after the holidays, so I think we're waiting for that announcement kind of imminently. Coming up on all of this and the FX market, the potential of a debt default is Vasily Serebryakov of UBS. Right. Equities up to kick off Wednesday morning. Good morning to you all. Equities up on the S&P, on the Nasdaq too. Equity futures advanced by 9 points, up 0.25% on the Nasdaq, up by 0.5%. But you're killing me this morning. Are you stretching?
I'm stretching out.
Is this like the New Year's workout?
New Year's workout, like every other clown. I've done it 5 days in a row. What do you want to do a poll? When does the New Year's workout end? I mean, you get to February 1st. 2 weeks in, the 15th. I saw a great story yesterday, and I forget where it came from and what gym it was, but ultimately there was a gym, a luxury high-end gym, that was banning new members from January 1st. I thought that was great, because for anyone that goes to the gym with a regular frequency, they know what happens in January, and they hate it. That first month of the year where their gym is full and their routine is disrupted. There's too many people are there. The part-timers, I call them the part-timers. They come in, new faces, never see them again. I'm in the walk-up, and, I mean, the biggest problem for me is the lat pull thing. This thing is right by the furnace. It's right by the furnace. And I'm sitting there, and the furnace is on, and the heat's coming off of it.
Just for the records, we used to work out together back in the day.
We did.
When we were in the same gym. Good times. Good times. I'd walk in the gym. I'd walk into the gym, and he'd turn around and he'd be like, I'm doing the ice hockey workout. The ice hockey workout. Just smashing machines.
I've done that, I believe. Just letting them smash. No, You're one of those, totally.
How can you get through in 20 minutes? And really,
a lot of slamming.
Yeah, I'm sorry, but I do feel, I folks, it's good, and I'm trying to get beyond February 1. That's the goal.
That's the goal. Just a month.
How are you doing?
I'm all right. I'm okay.
But you cut and chiseled. I mean, you're
not. We're not at that period of the year where you really want to be really cut and chiseled. But 5 times a week.
I'm still in search of that period.
I don't know where this conversation's going.
Let's save ourselves. Lisa's got individual
kind of want to peak
names.
in June, July, and then sort of maintain, and then September just
let it go off a cliff.
Let it go.
Absolutely let it go.
And then build up again.
These hurt.
Yeah.
Yeah.
With weights.
People on radio love that, especially motion.
On Bloomberg Radio, I'm so sorry. You are so advantaged.
Do you think there's anyone left?
Are you going to lead with Apple?
All right, no, I'm not going to lead with Apple. I'm leading with Salesforce, and Salesforce actually seeing a gain after an absolutely brutal year. Those shares up 3% after announcing a 10% workforce reduction after beefing up during the pandemic. But also, we were talking about the potential for reducing office space. I wonder how much that's going to be a theme. Microsoft shares, this to me is interesting, lower by 2%. There was some discussion about what's going to happen going forward with their cloud computing areas, the Azure cloud business. UBS downgraded them to neutral from buy. Again, this goes to this question of these darlings of the pandemic era. Were they overbid? And it still raises that question. And Micron shares up by 3.5%. And that comes as people are starting to get optimistic about the chip sector, having already built in a lot of the reduction in demand. And we already have seen so much pain baked into those prices. I think that took us to a serious place.
That's the best thing we've done this morning. I mean, well, that's without a doubt, Tom. That is the best thing we've done this morning. Apple earnings, by the way, 27th, I believe, January 27th. And Tom, I've got to say, I mean, do we do this every time with Apple earnings? I think we do.
Yeah.
Yes.
It's like the biggest earnings report ever. But given the price action we saw in December to kick off 2023 as well, and the doubts not just around supply, which we can kind of work through now, China's reopening, but Tom, real doubts about demand. And we'll see how that shows up in the quarter.
The doubts are always there. They're the biggest guy in the block. I like what Dan Ives colors it as, is the Rock of Gibraltar. So he lowers his target. He's still up 39% to his target.
Is it 175, right?
Yeah, I think
down from 200 or something like that.
I don't. It's just good morning, Lawrence Haverty, who I adore, who was legendary on Apple. There's always a reason not to own Apple. That's the way it's been for umpteen years. Let's move forward here with futures up 11, Dow futures up 77. We look at foreign exchange now. Vasily Serebryakov joins us now with foreign exchange macro strategy at UBS as well. Vasily, what I find so fascinating, and it really links into Ian Bremmer's Eurasia Group, is Chairman Powell, a central banker of the world, the historic strong dollar we saw, and what's the view on EM forward? Do you just presume stronger, better EM off of weaker dollar this year?
Well, I think EM might actually be a bit of a lagging part. So let's kind of break it down, right? So, as you say, the dollar's had a great run. What drove that, right? Fed tightening,
That seems to be coming to an end, hopefully, early this year. Troubles in Europe, that's certainly in terms of the gas price pressures, that's lessening a bit. China COVID lockdowns, they're reopening a little bit earlier than expected. So I think all of this is leading to some dollar weakness. I think one key ingredient that you're still missing is just the global growth recovery, right? I mean, the dollar tends to outperform in recessions and vice versa. So I think as far as EM assets are concerned, what we really need is just a broader growth upswing around the world. It's less of a problem, I think, for the G10. So I think in the G10, you might want to start shorting the dollar already, and that's really the UBS call at the moment. But you want to be more patient on emerging markets.
Where's the major pair opportunity now? Of the major pairs, which one is the greatest opportunity into Q1?
Well, I hate to keep it that simple, but I think it's euro dollar. I would have said probably the yen, a couple of weeks ago, but the yen has moved a lot. It may be a bit of an overreaction to be the BOJ. I think you don't want to buy the yen at these levels. I think you want to wait for some sort of pullback. But I think the euro is very well positioned here. Look, the movement in gas prices has been pretty dramatic in terms of going back to the pre-war levels. We're seeing some of the short-term and long-term flows actually improving for the euro. And the big part of it is the shift in ECB policy. I think people kind of forget about the wall of money coming out of Europe since 2014, really, when the ECB drove rates to negative. That's changing pretty quickly, and those yields are looking a lot more attractive. Obviously, you still have the growth fears. It's not going to be instantaneous, but I think given where we're trading, sort of around 105, 106, there's a pretty good levels to get long the euro for the medium term.
When you talk about money flows and flowing back to Europe, how much of that is actually from China as it reopens?
Yeah, that could be part of it. I mean, I think, overall, I think investors will be rethinking portfolio allocations very significantly this year, right? Part of it is just what you've talked about before. In the world of zero rates, U.S. tech looks amazingly attractive, right? In the world with positive nominal and real rates, you're looking at kind of more diversified asset allocations. And I think rising interest rates in Europe kind of put the fixed income there back on the map a little bit. In terms of equities, if we're seeing inflation normalize, that should support some of the value stocks that Europe has. So I think it will be a gradual process, but it seems that the starting point is also fairly depressed in terms of allocations to European assets, and even in terms of foreign exchange reserve managers from central banks around the world that are fairly underweight the euro at the moment.
So let's talk about the other side of that trade, the dollar weakness that would accompany that. And I want to actually dovetail what you just said, the reserve picture and some of the political questions around dollar ownership that perhaps couldn't be exercised during a period of such uncertainty globally. Do you see the deceleration, the weakness that we see in the dollar this year to be surprisingly big because of some of these other aspects, these geopolitical threats that people are going to really express?
I think that's going to be certainly a part of it. I'm never going to jump to the conclusion that the dollar is somehow losing its reserve currency status and things like that. We're not talking about that. I think what we're talking about is a more complicated world politically in terms of supply of commodities, in terms of things like friendshoring and so on. And I think that the great run that the dollar has had is starting to lose some of its momentum, and I think it's only going to happen more into this year. It's not necessarily going to benefit just Europe. So, for example, we're looking at G10 commodity producers such as Australia, such as Canada, which we think are quite well positioned in this world where commodity prices are still reasonably supported. Well, and those countries kind of feature kind of an attractive domestic economy and a political structure.
Well, very quickly, Vasily, after talking to Kevin Rudd yesterday of Australia, I mean, Australia obviously linked to China. So is that just simply long Australia against a set of currencies?
Yeah, so we've recommended long Australian dollar against Canadian dollar, kind of in a way, a little bit long the rest of the world versus the U.S. Australia is much more than China, though, because if you look at the structure of Australian commodity exports, it's not just about iron ore. It's a lot of this is in this green transition industrial metals that are important for things like electric car, battery manufacturing, and things like that. And Australia is pretty well positioned in that respect. So yes, it is partly China. It is partly China reopening, but I think it's a bigger green transition story as well for Australia.
Vasily, wonderful to hear from you. Vasily Serebryakov there of UBS. Thank you, sir. Touched on the BOJ just for a second there. Just want to pick up on the BOJ. Waking up to news this morning that the BOJ announced a fourth day of unscheduled bond buying. Tom, a fourth day of unscheduled bond buying as we go deeper into 2023 and kick off a new year. You just wonder, TK, is that still the place to watch? That's where we closed out the year.
Well,
is that where we're going to start the year looking again?
You know, scope and scale, 150, and I think the adults were saying when this theory collapses, you get to 110, maybe 105 strong yen. We're halfway there. We're 30% of the way there, whatever the number is. But as Vasily said, we've made a lot of ground here, strong yen against weak dollar. I agree the theory's still in place. That's certainly what we know.
Completely detached from the global bond market for the whole of last year. And now we're talking about catch-up. And it's interesting you've got a central bank, Lisa, that needs to come in and stay there and stay there and stay there, even on a couple of days where you see a big rally in treasuries yesterday and you see it again this morning.
So Torsten Slok over at Apollo put out a chart a couple of days ago. I think it was actually yesterday. Almost 50% of JGBs are owned by the Bank of Japan. This is not a market. We've talked about this. So what do you do? How do you make a market from something that has been absolutely frozen, paralyzed in another era? This has been the big question. And then the further question is, what effect does that have on the rest of the world? A really interesting note today from Stephen Major over at HSBC saying that perhaps it's not going to have as significant of an effect on U.S. bonds if the Bank of Japan does eliminate some of their yield curve control policies. And it goes into a whole host of things, but this really is one of the main questions of this year.
Well, the if there's the one we've got to explore. If they do X, if they do Y, I've got no idea what they're going to do this year. If they pull back from yield curve control all at once and start talking about hiking interest rates, then we've got a very different dynamic in the bond market. You have the BOJ hiking potentially. You have the ECB doing QT. Fed's still doing QT. Never mind Fed pause, still doing QT. And the people think the Fed's going to pause. They also think QT continues through the rest of the year.
The big wild card here is, when does the downturn happen? And does it basically offset some of the tightening and allow perhaps an easing in some of these tighter monetary policies?
Treasuries this morning, just south of 370 on a 10-year. Yields lower by 5 basis points. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. It's back to the drawing board for Republican lawmakers today in another attempt to elect a House Speaker. After 3 rounds of balloting, Kevin McCarthy was unable to gain the majority of votes from his own party. It's the first time since 1923 and only the second time since the Civil War that a House Speaker wasn't elected on the first ballot. The European Union is moving toward requiring COVID tests for travelers from China. EU health advisors have agreed on a draft opinion that includes masking and pre-flight testing requirements. Several European countries, including Italy and Spain, have already imposed testing rules on flights from China. In the UK, food inflation in stores jumped to a record high last month, and retailers are warning that prices will stay elevated for another year. According to the British Retail Consortium, food inflation rose to 13.3% in December. The organization says the war in Ukraine has pushed up the cost of animal feed, fertilizer, and energy. FTX founder Sam Bankman-Fried now faces a trial in October on the collapse of his crypto empire. In a court in Manhattan, Bankman-Fried pleaded not guilty to criminal charges. U.S. prosecutors say they expect to produce all the evidence for the case in the next 4 weeks. And it's the best year ever for gains for British hedge fund manager Crispin O'Day. His flagship European Incorporated fund soared 152% last year. Gains were powered mainly by O'Day's highly leveraged short wagers on long-dated UK government bonds. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
This policy U-turn on zero COVID, which was executed on 7 December, will raise a whole series of questions in Chinese political circles about the fallibility of Xi Jinping's political judgments. And so therefore that does create a dent in the armor for the long term.
That was Kevin Rudd, the former Australian Prime Minister, catching up with Tom Keene and Ian Bremmer over at Eurasia Group just yesterday on their top risk for 2023. We'll build on that in just a moment. I want to run you through the price action. Equities just about elevated and positive to kick things off this morning. We're up by 0.2% on the S&P 500. Rolling over just a little bit, so keep an eye on that. Yields are lowest, again, by 5 basis points this time this morning. Sub 370, 368.65, lower over the last couple of days to kick off 2023. Much higher, though, relative to where they were 12 months ago at about 160-something to kick off things in 2022. We had a massive move higher in bond yields worldwide, with the exception of Japan, of course, and that'll be a conversation for us later this month. In the FX market, euro-dollar 106.02, positive 0.5%. Decent start to the year for economic data out of Europe, all relative, of course, relative to expectations and relative to the previous month as well. PMI's relatively okay, but still pretty dire in absolute terms. Likewise with CPI, Tom, bit of disinflation, France, Germany.
Number one thing I'm watching.
Ultimately, inflation's still too high for this ECB.
And where do we come down to, whether it's ECB or Fed as well? But I'm going to state this, and you know, I was on the beach, and you know, I was really distracted. But the bottom line is Spain, France. There's a disinflationary trend. January 12th is really important.
What beach?
Beach. I was, you know, the beach. The beach.
What beach?
Come on, you can improv better than that.
You were in Cornwall, and I was on the beach.
Oh, we're just making up stories again.
Yeah, we are. Here we go. Yesterday was a joy with Ian Bremmer of Eurasia Group with their 10 major risks of the year. He has Ayam Kamel with us to drive the story forward on the complexities of the moment, where possibly, as Middle East practice head at Eurasia Group, you write about Iran and make it discreet and separate, except you can't do that. Thank you so much for joining us this morning. I want to be direct. CNN, within the last hour, reports of Iranian drones downed in Ukraine, made with complex U.S. and Western parts as well. How does that complicate the Iranian story, that they are using drones to Russia to be used against Ukraine? How does that complicate your top risk for the year?
Well, I think it falls in line. The Iranians have chosen a side, and it is to side with Russia and Putin's war in Ukraine. That makes it much more complicated for Washington to engage diplomatically, having Tehran support Putin with drones, with other ammunition as well. But also the Europeans, Tom, the Europeans have a voice in this. They've always seen Iran as relatively engaging constructively at times. Now it's taking a very negative position on an issue that is core to European security. So diplomacy is in trouble, JCPOA in trouble, and of course Tehran is going to react.
Tehran is going to react. How does Europe respond to Iran this year? I mean, I should make it a U.S.-centric conversation, but it seems so much tied up with Russia. How does Europe respond to the Islamic State in Iran?
Well, you've seen a lot more willingness to introduce sanctions based on the protests that you've seen in Iran. So it's a more activist Europe when it comes to trying to create caps on what Iran is willing to do. But also in terms of nuclear diplomacy, if the Europeans don't play a constructive part in bridging the distance between Tehran and Washington, then you don't have JCPOA revival or revival of the nuclear agreement. So the Europeans are important in this story, but obviously Washington is the one that holds the keys to any deal with Tehran.
How much are you starting to see moves away from or toward reducing Washington's role here? And I say this as Credit Suisse analyst Zoltan Poser put out this report talking about how a lot of Middle Eastern countries will start accepting payments for crude in yuan of China as they reopen, or potentially having more euro-denominated sales. Do you start to see any kind of shift toward a greater opening up, diversification away from the U.S., from Middle Eastern nations and some of the commerce?
Well, I think part of that is happening independently. It's a big story, and it is a lot of the Middle Eastern U.S. partners that are engaging with China. President Xi was in Riyadh just in December, and a lot of Arab leaders were there also to engage
The message here is America's partners in the region are looking for other partners. So I think more of that will happen, primarily as a form of hedging. Yuan oil contracts, for me, I think are going to be a minor story. Riyadh is not going to price most of its barrels and sell most of its barrels in in yuan. US dollars remain the core currency that they would like to do business with. The same for other countries in the region. What is important is China is beginning to chip away in a region that has been primarily a zone of influence for Washington.
How does the Middle East compete with Russia with respect to supplying crude to China? Particularly with reopening.
Well, I think you're seeing a bit of an opportunity here for different Middle Eastern oil producers and gas producers. On the gas front, Qatar has been very well willing to take a share of that pie, that expanding production or expanding exports towards Europe. And in the future, there's certainly a slice there, not only in the Asian markets, but also in Europe. For OPEC and for the oil producers in the region, Saudi Arabia primarily, although it has a productive relationship with Russia, it sees a little bit of an opportunity to capture the European market. There is certainly room there, but remember, Russian barrels are also going towards Asia, so there's more competition there.
And what is the path of a theocracy in Iran this year? What should we watch for? I mean, so much of us are removed from Iran. What should we watch for this year from the religious and civil debate within Iran?
Well, Tom, a really great question. The theocracy is struggling. It has a legitimacy crisis, and potentially we could have a succession crisis. The leader, the supreme leader, Ali Khamenei, is old, he's aging, and without him as an arbiter in the system, we might have an actual protest movement, diplomacy problems with Iran, pressure from Israel, and also an internal power struggle. So watch for the power transition or power issues that could emerge if he passes away.
I'm Kamal of Eurasia Group. Thank you, sir. As always, just a bit of news for you following this story down in Washington, D.C. As you've all witnessed in the last 24 hours, Representative Kevin McCarthy struggling to get enough votes to become the next House Speaker. This from the former President Donald Trump, out in a social media post saying the following: some really good conversations took place last night. It's now time for all of our great Republican House members to vote for Kevin, close the deal, take the victory. He goes on to say, Republicans do not turn a great triumph into a giant and embarrassing defeat. It's time to celebrate. You deserve it. Kevin McCarthy will do a good job, and Tom, maybe even a great job. The former President Donald Trump there, just moments ago.
And you wonder where this advances to. I mean, this has got to be his path, given all of the turmoil around the former president. This has got to be his path in, is to support, you know, again, is Mike Allen partitioned 4 Republican parties? Where does Donald Trump fit into that? Where does Ron DeSantis fit into that? These are great unknowns.
This will be another test, I guess, of how much sway he has within his party.
Yeah, I guess so. And, you know, I go back to the Congresswoman from Georgia, who you'd think would be voting with these people, and she didn't mince words. Marjorie Taylor said, I'm sorry, let's go. McCarthy.
I asked AMH this question about 30 minutes ago. Lisa, what's the timeline for this? How much longer can you keep doing this for? Weeks, months, days?
Well, you can do it for weeks. That has been the historical precedent. You really can't politically, though. This will be devastating because they cannot do any other order of business until they get a House Speaker. So that basically freezes any activity for a major governing body at a time when, as Donald Trump said, you know, this is a victory and it will be turned into a defeat.
It's theatre right now. Do you think this can be material? You suggested earlier this morning you think it could be.
The theater of it is certainly political drama. The bigger implication is that gridlock is even more entrenched, even in the Republican Party, let alone the overall Congress. And that creates some real question marks around policy later on, yes.
Lisa, on the politics down in Washington. Equity futures right now up 0.2% on the S&P, coming into a brand new year. And this man right here, Mike Wilson of Morgan Stanley, thinks there's some real downside ahead potentially. We'll talk to him about that in just a moment. Mike Wilson of Morgan Stanley, chief equity strategist and arguably the strategist of the year on Wall Street and the equity market in 2022. On 2023, looking ahead.
Killed that.
He joins us next.
recession will be long and shallow, and I think it could happen later than people anticipate.
Short-term recession is still unlikely, right? Given the strength of the consumer still, as well as the incredible resilience of the labor market.
We're past peak inflation, but we're still not really at the target.
Recession is pretty likely just because of what the Fed has to do.
The risks are high. I think we are going to shift a bit from the inflation risk side to the growth risk side.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on radio, on television, and the team busting my chops there with our opening montage. Recession, recession, recession. It's out of control, John. Into the new year, I have never seen a navel-gazing on economic slowdown like I see now.
It's the conversation I started 23 with Subhadra Japa of SocGen, Jim Carrey and Morgan Stanley. Subhadra Japa really pushed back against the prospect of recession anytime soon. She said, look at the labour market. We're still looking for 200K on Friday. Unemployment in and around 3.5%, wages at 5%. She's basically asking, Tom, what recession?
Well, you know, in Bloomberg on the Economy years ago, we don't need to halt the show for this right now, but Martin Feldstein, who invented NBER and all the good work, and Jeffrey Frankel at Harvard, these are the smartest guys on the block. They can't predict recession. Why should the pundits think they can?
It's tremendously difficult to do. But what we've also got to try and understand, Tom, is the trajectory for earnings. And I think that's what's going to be interesting about this equity market this year. So the average forecast on the street right now of the analysts, the strategists that we survey, Tom, that's about 4K year end on the S&P. But our next guest, Mike Wilson of Morgan Stanley, is going to tell you it's about the path to get there. And he sees a real low potentially in our near-term future, Tom.
I agree.
Off the
and
back of earnings.
Down the income statement and into cash flow as well. We're going to keep this short to get to Mr. Wilson of Morgan Stanley here in a moment. Lisa, your observation here on the recession chatter. We're going into important economic data today, jobs on Friday, inflation January 12th, and it does come down to gaming Q1 GDP.
The data has been better than expected, at least where it counts, except for the labor market, where there still is the strength that potentially could fuel wage inflation. But this really is my main question to Mike Wilson and to others who see this earnings decline.
Right.
The data has actually cooperated, and you have a China reopening and actually warmer weather, which has taken off the edge of the fears around oil prices. This is just a concern. How does that play into whether a recession is delayed?
John, yields come in today 6 basis points on the 10-year yield, 3.68%. Maybe not a technical moment, but certainly lower yields is the message now.
Lisa told me earlier this morning it's the strongest New Year start going back to 2001. In the bond market, yields lower again today.
Really?
By 5 or 6 basis points on a 10-year. TK, your 10-year right now, 368.
Yeah, and there we are. The dollar weaker as well. Futures up 11. Let's get right to it right now. Michael Wilson, without question, the top strategist we have observed for last year, chief U.S. equity strategist at Morgan Stanley. Mike, I want to go to technique here. Do you change your technique, your day-to-day grind at Morgan Stanley? And the classic idea is, are you bottom up, top down, all this? There's the factor analysis out of MIT years ago. What is the process of Wilson's strategy for this year?
Well, good morning, Tom, and Happy New Year to all of you. The process never changes, okay? We do all of those things you mentioned, top-down, bottoms-up, factor analysis. However, what I would say is that at certain times we emphasize, one over the other. And I would say that, going into 2023, it's probably going to be a little bit more bottoms up, a little bit more dispersion amongst stocks, even perhaps within sectors. We're doing a lot of work on that this week, actually, for next week's note with respect to, okay, well, how are we going to make money on a relative value basis? And that started to emerge again a little bit at the end of last year, because at the end of these bear markets, what happens is the big kahunas, right, the big market cap leaders are the ones that eventually have to fall. And that's exactly what we're seeing this year at the end of last year. So we think there is going to be opportunity at the stock level. And we've been talking about that since October.
Where's the greatest variability, the partial differential on the income statement? Is revenue the greater mystery, or do you go down to EBITDA or down to net income?
No, that's a great question, Tom. It's all about profitability. And we've been talking about this one factor really since January, February, operational efficiency. That's what the market's paying for. And it continues to pay up for companies that can basically deliver to the bottom line. All right. So revenue growth, we know, is going to be softer than last year. We don't know if it's going to be negative, because that ties into the question around recession, which you all were just debating. I think being a bond investor is harder than being a stock investor right now, because being a bond investor, you don't know if you're going to get a labor cycle. Okay. But in the equity market, we don't really care, because if you don't get a labor cycle, then the margins are going to be even worse. So I think either way, we're going to get a nasty earnings recession. And so the companies that can deliver on the cost efficiency are the ones that are going to continue to perform until you fully price, whatever this downturn on earnings are going to be.
So, Mike, are we starting to see those cuts emerge in big tech? And does that make you a little bit more constructive on the sector into 23?
Well, not yet. We're starting to see it. I think look, this is one of the areas, I would say consumer goods in particular, and tech were the two areas of most egregious over-earning and margins as well as top line. And that just has to get wrung out. The thing that concerns me about tech companies, John, is that they're not good cost cutters traditionally, right? They're growth companies. They tend to want to invest into these downturns. They want to invest, aggressively through all periods of time, and they're just not good at cost cutting. And so they're going to be late on that. They're probably not going to do enough. And so it'll take longer than you think. And so the margin degradation could be more severe in those areas. Now, there are parts of tech that have already gone through that. The other thing I would say is be careful about how you define tech, right? If you look at the top 6 or 7 stocks in the S&P, we all know what they are. Only 2 of them are real tech companies. The other ones are communication services and consumer retail.
Mike, how has the potential reopening of China changed your view? Because you've been talking about the potential for an earnings downturn for a while now, and a lot has changed in the past couple of weeks with respect to China, with respect to a warmer than expected winter.
Look, it factors into our analysis for sure from an economic standpoint. I think from an earnings standpoint, it's less important though, Lisa, because we look at this carefully. China only accounts for about 4% of S&P revenue. So it's just not that significant. Now, for some companies, it's very significant. The other thing I would caution on is that, China really hasn't been closed from a production standpoint, right? We haven't wanted for many things. They've been produced, they've been doing these rolling lockdowns, and the factories have been pretty wide open, quite frankly. So this is more about consumption at the domestic level. So I think it's a real positive for the Chinese stock market and certain pockets of that. That's why we upgraded China a few months ago. But I'm not sure it's a big deal for the U.S. stock market.
But what about with consumer spending? We've seen that hang in there. That's come out better than expected, at least over the past number of weeks in select industries. Does that make you change your view at all? Or is that basically what's to be expected in the last gasps before the downturn that we see in the first quarter?
Yeah, unfortunately, I think we're just seeing the last gasp, as you mentioned. Part of that is holiday spend. Okay, so, it's the American way. We don't want to be Scrooge. People are going to spend money on the holidays. And I think they're going to probably hunker down. We've heard some large consumer retailers talk about that dynamic where they expect demand to fall off sharply once the holiday season is over. So that's what we're going to be watching carefully. We're pretty confident about interest rate sensitive areas like housing and autos. Those are pretty obvious, victims of the higher rates. But I think even broader speaking, we're expecting a pretty sharp downturn in consumption over the first 6 months of this year, at least as it stands in terms of profitable spending. Okay, discounting will return. That's one of our themes for this year, which is why we think inflation will come down pretty sharply.
So, Mike, with that in mind, do you and the team still believe there's about 20% of downside at the index level here?
We do. We think 3,000 is a very achievable number, given our confidence on our earnings forecast. And so, ironically, I would say in the absence of a recession, meaning companies decide to not lay off aggressively, that target looks more achievable. That may sound counterintuitive, but that's the way we're modeling it today. So our bear case is actually we avoid a recession, but not the slowdown.
Right.
That would be the 3,000 scenario and $180 in earnings.
My quote from last year was from the great Nassim Taleb, who said the gravity's back, the idea that money costs something, the risk-free rate's there. To me, my theme for the year is the great zombie roll-up. Not the companies Morgan Stanley follows, but all the garbage companies out there that have had a 15, 16-year free ride. What happens to them in 2023?
Well, I think it's already begun. We've seen what's going on, right? When the cost of capital goes up, these business models flat out don't work. And so we've had 15 years of easy monetary policy globally. That is now being normalized in a more rapid way than anybody expected, including us, quite frankly, even though we had that view a year ago. And that's just going to run ramshot over these business models. And by the way, Tom, I'm not sure that's a bad thing if we can do it in a way that isn't too destructive, to the broader economy. We need a normalization of the cost of capital because it's not healthy for the broader economy. Yep. It's not healthy for 5 companies to account for 25% of the market cap, which is what happened in the last 10 years. We need a more democratic economy where, medium, small-sized businesses have a fighting chance, and the cost of capital rising, ironically, is part of that.
It's amazing. Discipline makes a comeback. Mike, wonderful as always, buddy. Happy New Year to you and the team. Looking forward to plenty of coverage through 2023. Mike Wilson there of Morgan Stanley, looking for 20% plus downside at the index level. Tom, potentially coming in the next 6 months.
Potentially. I think it's a potential framework, and it wraps around, I defer to Ellen Zentner, who's a great economist on this, but it wraps around certain things happening. I would say pushing against that potential is a disinflationary trend that possibly is in place. That's the big bet.
Well, some people might make the argument that China reopening could be the story. Lisa, we got some pushback there about what it really means for corporate earnings on the S&P.
Saying it actually doesn't have that big of an influence and that production really hasn't stopped, so that doesn't necessarily ease supply chains all that much. He also makes the argument that weaker inflation data may be bullish for bonds, but not for stocks. It is actually bearish in terms of just the demand picture and what people are going to push back in terms of pricing. What I find interesting is, could you see a stock market decline, but the economy hang in there? Right? Basically, it expressed in asset markets, but the economy more resilient.
Kind of the opposite to 2020.
It's opposite to the past decade.
Yeah. TK, what you make of that?
I think this is critical. Her insight is critical that they're separate. The economy, folks, is separate from the stock market. That's just rule number one.
It was kind of the story last year, wasn't it? The economy was okay.
Well, the story last year was the bond market. The absolute singular... No, but John, the singular distinction last year was the bond market crater.
Cratered
Never
with
seen
equities.
Cratered.
60-40, punished. World of pain, brutal. Equities up 0.4%. Very dramatic this morning. Dramatic start to 23. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Donald Trump is interjecting himself into the fight over Kevin McCarthy's bid to become Speaker of the House. The former president says it's time for all Republican lawmakers to vote for McCarthy. In 3 rounds of balloting Tuesday, McCarthy couldn't get the GOP votes he needed to become Speaker. He'll try again today. The Federal Reserve is about to shed more light on why it's worried that strong inflation may linger. Today, the Fed will publish minutes of last month's policymakers meeting. At the end of that meeting, Fed officials published new projections showing they expected inflation would end 2023 higher than they previously thought. Russia has raised the death toll from a Ukrainian rocket attack on its troops New Year's Day. The Kremlin now says 89 soldiers were killed, the largest such loss it has acknowledged in the war. It blamed the soldiers' mobile phone use for exposing their location. Job cuts on the way at Salesforce. The cloud-based software company says it plans to cut about 10% of its staff in a restructuring and will take up to $2.1 billion in charges. As of last October, Salesforce employed almost 80,000 people. The company says it just hired too many employees, leading into the economic downturn. And mortgage applications fell again in the U.S. last week. According to the Mortgage Bankers Association, they were down more than 10%. Meanwhile, the rate for the average 30-year loan rose to almost 6.6%. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
The fiscal situation in the U.S. has deteriorated very sharply. Up to now, markets have been extremely tolerant about this. Recession is pretty likely just because of what the Fed has to do. The Fed has to drive up the unemployment rate sufficiently to slow down the economy.
Fantastic conversation with Bill Dudley there, the former New York Fed president and Bloomberg opinion columnist. And that last line is so controversial. The Fed has to drive up the unemployment rate sufficiently to slow down the economy. This is something Subhadra Rajapra Sokjen was talking about yesterday to me about this bond market and the broader labour market too. She thinks it's going to be much, much harder to get unemployment from where it is right now in and around 3.5% to 4.5%. And she thinks ultimately this Fed has more work to do, and that's going to be a conversation we have, no doubt, through most of 2023. Equities right now on the S&P 500 up 0.33%. Lisa went through the economic data to look out for a little bit later. JOLTS data, the ISM. Job openings in America, we're told 1.7 job openings per unemployed American. An amazing statistic, which was even higher at one point last year. Lisa, I think it was through 2, wasn't it? More than 2.
Yeah, and this really points to perhaps the tightness in the labor market, although some people wonder whether it's so difficult to get workers that companies just advertise as many jobs as they possibly can in order to attract a number of people to apply for those jobs. Again, still speaking to those tightness.
So let's JOLTS. Job openings coming up a little bit later, the ISM as well, and then later on this afternoon, Tom, minutes for the Federal Reserve.
And I guess JOLTS is important. McKee has lectured me numerous times. JOLTS is way underestimated by the street.
Seems to be the target right now for the Fed to get that number, get it reduced.
We're going to dive now into, I guess, what's going on in Washington. Anne-Marie Horton, I thought John was just great here in trying to explain where we go this afternoon. We get further perspective from Greg Valliere, Chief U.S. Policy Strategist at AGF. Greg, I randomly looked at the 20 names of these Congress people against Mr. McCarthy, I guess against a lot of what we would call political normality. One of the Congress people, the gentleman from, I believe, the 9th District, Georgia, called the Capitol attack of January, quote, no insurrection, quote, a normal tourist visit. As Butch Cassidy said, who are these guys?
Yeah, you're right, Tom. You know, I've been doing this for a long time, and I have never seen anything as crazy as this story, with a handful of extreme members of the House denying the Republicans control of the House. And this could go on for a long, long time.
Mr. Trump says it should not go along for a long time. John read his truth, the social media thing. Close the deal, take the victory, said the president. Could that be enough to sway them today?
It might. There's talk that a lot of Republicans are going to Sean Hannity and going to other conservative commentators to see if they can dissuade these rebels. Not sure it's going to work. I think this drags on for weeks.
What about the voters? I mean, is there a sense that this is what people want? That's sort of just break things up or destroy the status quo, start something new? Is that basically the voters' will behind some of these representatives?
Not really. I mean, it's a self-inflicted wound by the Republicans. I don't think the voters would be pleased to see this kind of dysfunction. You know, for the markets right now, Lisa, I don't sense that this is the biggest story. There are biggest stories, as you know, on the Fed, things like that. But if this drags well into the spring, people are going to start worrying about the debt ceiling, about a credit crunch, about some sort of default of the U.S. budget. If this drags on, I think it will start to become an irritant for the markets.
So, Greg, let's stay there because I've been talking about this morning and my co-hosts have thought that I was being a bit histrionic. How serious could it get? What are the sort of parallels here between what we're seeing with the Republican Congress, they're laughing at me, and 2011 when we did see a debt default, or not debt default, but we did see the downgrade and the debt ceiling debate really go to the last minute?
Well, most of these dissenters who don't like McCarthy want this to happen. They would like to see a debt crisis. So that's something you've got to be concerned about. You know, another important point is that, let's say Kevin McCarthy does win. 4 or 5 or 6 House members in the next 2 years could scuttle everything. They have him on such a short leash that on a lot of these issues, they can still prevail.
Wait, hold on a second, Greg. Why do they want to see a debt ceiling scuttle?
Oh, because it will curb spending. I mean, they feel that is the only way you can get discipline on spending. They're furious at Mitch McConnell, who's going with Joe Biden today to a new bridge construction, spending a lot of money. There's huge divisions over spending money, and some Republicans, a minority, granted, wouldn't mind seeing a debt default credit crisis, which I think is crazy.
Greg, the historical moment, it goes back to AUH2O, it goes back to the Democrat Lester Maddox and on and on. I don't want to do a history lesson here, but the reality is there's ramifications to this behavior. Does it make centrist Democrats stronger?
Absolutely. And it weakens the Republicans. I mean, there were some pretty decent, whatever your politics were. Paul Ryan was a quality House Speaker. John Boehner was a quality House Speaker. Their careers were scuttled by a minority, a tiny minority of radicals who didn't want to compromise in the least.
Greg Valliere there of AGF Investments on the latest down in Washington, D.C. Greg, thank you, sir, as always. Fascinating to follow. And just to set the record straight, you've diluted your approach to this default conversation over the last 2 hours. And I think none of us are saying this is not going to be a story at some point in 2023.
Oh, you're saying that of course the market wouldn't be responding yet because it's further on.
Why would it?
Yeah, you're right. Why would it? But at the same time, it does set up sort of the inevitable turmoil, which is exhausting. I agree, because it happens every year. At the same time, it feels like it has a different tone, a certain sort of more extreme tilt this year.
And what often happens, people buy the bonds that apparently are about to... I mean, can you make sense of that?
No.
No? Is that going to change?
Well, maybe. I don't know. I can't.
Possibly. Who knows? Don't want to make a market call here, Tom, on the year ahead.
I'm not going to make a market call on fiscal policy or that. I think it's way too uncertain what I would say. And, I'm going to be honest. I had family members who were hysterical over the decades about the rising debt and all that. I've lived it, as Greg Valliere has, through cycle after cycle after cycle. It gets fixed like it did. And Lisa, you're right. There was real turmoil. I remember that clear as a bell with a downgrade and all that. And, I was on the set with the head guy from S&P, and he was explaining this historic moment. But we got beyond it.
Was that Moritz Kramer? Huh? Moritz Kramer? I'm trying to think of his name. I used to catch up with him all the time.
Yeah.
Do you remember we used to speak to people at the rating agencies all the time?
Yeah.
Over the European issues, the US issues.
Yeah, it's a tangible worry. I mean, there's no question about it.
On a fixed income market, coming up in the next hour, Greg Peters of PGM Fixed Income. Going to catch up with Mo Hangbin of Invesco as well. Savita Subramaniam on this equity market.
Where is she?
Savita maybe not bullish at the index level, but thinks potentially there's some things to be done beneath the surface.
I agree.
And maybe a little contrarian in the near term. And we'll talk about the importance of January at a buy signal.
I thought that was interesting.
You saw that note yesterday.
That was fascinating. Basically saying people have gotten so bearish that perhaps that's, a contrarian buy in the short term.
So Savita coming up. And then after that, we'll catch up with Pierre Farago of New Street Research on Tesla, what's happened in the last couple of days, the last month for that matter, and on Apple as well.
I mean, I would never want to tell you what to ask on your program.
No, please do. Make a suggestion.
Savita is so good at ESG. I would love to know where ESG goes in 2023. She owns the high ground on this quantitatively, the Berkeley math. And I would love to know, with coal ascendant, where is Subramanian on ESG, which Bank of America and everybody else thinks is the greatest thing since sliced bread.
She's got a lot of thoughts on the decline of globalization as well. So that might be worthy of a longer conversation. Savita coming up in about an hour from now. Are you going to tune in for that, Tom?
Yeah, I am.
Okay.
I'm not focused because I'm back from the beach.
Seriously, I get emails.
I'm just
on
not
radio.
Yeah, he still is.
Paul Sweeney's trying to get him to focus, and Tom's emailing me about a graphic he saw on TV.
I was about to say, it's not a conversation.
He'll say something, I like the font.
I'm not back from the beach yet.
The color.
From New York. This was special. Thank you.
We survived. Bloomberg Surveillance, we say good morning. First day back for John Ferro, Lisa Abramowicz, and Tom Keene. We have really enjoyed it. Hope you have as well. On radio, on television, lots to talk about. Right now, John Ferro prepares for his 9 o'clock hour. That will be important. So, Lisa, the insight from Mike Wilson that we got, I think, is really, really nuanced and important. What I saw from him is he's going to use every bit of analysis he can use to try to figure out where we're going. There isn't a certain formula.
And the economy is not the stock market. And even though the stock market has done well while the economy suffered over the past couple of decades, it is potentially going to be the opposite, where you get a downturn in the stock market to the tune of perhaps even 20%, even if you don't necessarily have a commensurate downturn in the U.S. economy.
Someone who believes in delinking economics from the markets, Conrad de Quadros joins us now, Senior Economic Advisor at Bring Capital. We dive into careful analysis of where we are right now. Conrad, I'm just going to go to the blunt instrument which was first day back yesterday. I'm with Ian Bremmer down at Eurasia Group, the bottom of Fifth Avenue, and all I heard was recession gloom predominant. Can John Riding and Conrad de Quadros, can you actually game or predict a recession?
I think we can talk about the risks of recession. I think trying to determine the precise timing of a recession is very difficult. I'd also say all the stories about the first day back and recession risks up, nothing has really changed between the end of 2022 and the first day of 2023. What we know is we have some signals that are somewhat ominous. We have signals from the market in the inversion of the yield curve, but we also have a lack of confirmation, I think, in some of the economic data, and that's something that we'll be looking at. For example, we have this continued strength in the labor market. We have an unemployment rate that's very low and hasn't started rising yet. That'd be one signal that we'd have to look for, a rise in the unemployment rate. And before we get that, I think declines in job openings, and then, even potentially over the course of the year, we would expect to see some contraction in profit margin. Those are all the kind of economic variables that we would be looking for as a confirmation that we're getting closer to recession.
Are you suggesting that this morning's data has value? Is it ISM? Is it JOLTS? Which part of that will you and John really focus on?
The far more important release to me will be the job openings report. ISM, it's obviously important. We have a lot of history on it. We've traditionally focused on it closely, but it's representative of a relatively small part of the U.S. economy now. Manufacturing in employment terms is less than 10% of the economy. But the job openings data are key, and it will also be the predominant focus of these numbers for the Fed. The Fed is looking for some softening in the demand for labor, and the way that we can measure that, I think, best is through the job openings data. And right now we have approximately 10 million job openings, closer to 11 million job openings, and we have 6 million people unemployed. So there's still a significant excess demand for labor relative to the supply of unemployed workers who are looking for work. And this is going to be a key variable for determining how the labor market progresses over the course of the year, and also how the Fed feels about its progress in trying to bring demand into better alignment with supply.
Conrad, creeping into the conversation around the edges is we're already starting to see disinflation, certainly in goods. How about seeing even more disinflation without people having to lose their jobs, without hoping sort of perversely for some sort of increase in unemployment and a decline in the pace of how much wages are increasing?
Well, from our perspective and the way that we look at the inflation process, it doesn't have a lot to do really with the labor market and with demand. We're much more focused on the stance of policy, which obviously for some time has been quite easy. And so even with, you can have these periods in which you have cost pressures in either direction, but whether or not those cost pressures work their way into final prices depends on the stance of policy. So, for example, the last ISM, we had a prices paid index that fell below 50, suggesting obviously price declines in the goods area for manufacturers. But there's a lot of anecdotal commentary about those cost declines not being passed on through suppliers. And that, I think, is reflective of the stance of policy, which is still accommodative, still providing companies with pricing power. So I think going forward, obviously on the cost side, that we need to look at things like the labor market, and the strength of the labor market, the tightness of the labor market will determine labor costs. But the extent to which that feeds through into prices in either direction, whether companies pass through declines on the good side or increases in terms of labor costs, I think will depend on the stance of policy. And of course, the Fed now, I think, in this last set of SEPs has a much more realistic outlook on both the path of inflation, which is they're looking for slower inflation, but still nowhere near target. And I think that that's reasonable, getting inflation below 4% this year. And the Fed's also looking for a higher Fed funds rate, where the Fed funds are moving above 5, achieving that real Fed funds rate. And that would be a signal, I think, that they are starting to move policy into a more restrictive stance, and that was what will give us success in terms of bringing inflation down.
That said, it seemed like there was a slight change in tone last month when we heard from the Federal Reserve that there was more of a concern of over-tightening and perhaps stymieing any kind of recovery amid inflation that already was coming down. We heard that certainly from the tone of Jay Powell to some degree, perhaps Lael Brainerd leading the charge on that front. How much do you think that's going to be reflected in the meeting minutes that we get today?
Well, Lisa, I read the Fed as being much more closely aligned than I had expected going into that meeting. I mean, the fact that there were 17 of 19 FOMC participants who expect or believe that it would be appropriate to get the funds rate above 5% this year. I mean, that seems to me to be a pretty cohesive group. There's a couple, of course, who have a lower outlook for the funds rate. But, if you look at the September and the December SEPs, the lowest forecast projections for the Fed funds rate for 2023 in the December SEPs were the highest in September. So we did have this, I think, fairly significant shift towards a more hawkish stance by the Fed. And I think that it was quite broadly held by Fed officials, given the number who expect to see a Fed funds rate or think they should be moving the Fed funds rate above 5%. So I think it was fairly hawkish. I would expect to see that continued concern within the minutes about getting inflation down to target, because remember, again, they raised their inflation forecast for the year, so it's taking longer for them to get inflation to target.
On radio and television, Conrad DeQuadros with us, a real generous amount of time with him this morning, which is a good and beautiful thing. And now, Conrad, we go where John Writing and Conrad DeQuadros fear to tread back to the 70s. A lot of people now, Conrad, making a big deal about money supply has come in, pandemic, money supply expansion, M2, whatever, falling off a cliff. Ed Hyman's got it as a chart over at ISI. Do you and John care about what M0, M1, M2, M8 are doing, where money supply has come in and been reduced?
Well, Tom, I think money as a concept is very important, but the question is whether that's appropriately measured by some of the aggregates. In an environment where the Fed is no longer targeting those aggregates, right? The Fed will provide whatever money is necessary to keep the Fed funds rate at the target, which is kind of a not that useful as much of a useful concept anymore, given the excessive amount of bank reserves. So I don't think M2 is really an important variable. I would say on M2, what we've seen is a slowing in the growth rate of M2. But you look at levels of M2, it's still very high. I think that if we look at other measures of money in the system, whether they're bank reserves, whether there's still very large amounts of money that are flowing back to the Fed from groups like money market mutual funds to the reverse repo program, I think it's hard to make the argument that money is getting tight.
Right.
Now, I think the Fed will get there. We will start to see. We have the balance sheet that's been reduced. We have the Fed funds rate that's being moved higher, and so the Fed will move to a tighter stance of policy. And I think that will begin to bite in 2023, and that's what will give us the pullback in job openings. That's what will give us the moderation of inflation. But M2 is not really the measure that I'm looking at.
So the unfair question is the shades of getting too restrictive. Dominic Constam over at Mizuho suggests maybe on the edge of super restrictive, particularly if deflation clicks in. How close to restrictive policy are we?
Well, Tom, right now we have a Fed funds rate that in real terms is negative. And I don't see any way that we can describe a negative rate, a negative real rate, as being restrictive. And if you look at the past when the Fed has been in tightening cycles, they've always gotten the Fed funds rate into positive territory, even in environments where they were more worried about inflation over the medium term being below their target than above it, like in the last cycle. And we haven't got there yet. So policy with an inflation rate, with the Fed still fighting an inflation battle, we have a policy rate that in real terms that is still below where it was when they were more worried about inflation being below target. So I think the policy rate is not yet tight. I think the Fed will get the policy rate tight, and it will be, if we measure it along the lines of a real policy rate, it will be a combination of the Fed moving the nominal rate up and inflation coming down. But I don't think we're there yet.
Conrad, thank you so much. Hugely valuable. Conrad DeQuadros there with Breen Capital, writing with John Writing each and every day. That to me is the heart of the matter. My own way I look at this, within the myriad ways you can look at this, is the real yield. And we made that dash where we were sort of talking two-ish, and now it's 1.4321, 1.43%. I did a big fancy technical thing. 2.05 is sort of where we were years ago. And speaking very loosely here, we're distant from that, as Mr. DeQuadros talked about.
Another way to put this is that the higher that real yield, that inflation-adjusted yield goes, the more restrictive the Fed is perceived as. And we are at a lesser restrictive degree.
Oh,
You
yeah.
can see that in the financial conditions index as well today, loosening to a lesser negative. And this really is the question. At what point does this matter again to a Federal Reserve that has looked to markets to be the instrument to transmit financial policy?
You know, and I'm glad you mentioned this, because when I was on the beach, this is the one thing I looked at off the phone is the Bloomberg Financial Conditions Index, a negative 0.414 is more accommodative than where we were the middle of December.
Sounds like a thrilling beach read.
It wasn't a read. I just had to sneak the phone, you know.
Did you get the sand?
Well, it's black sand. I really didn't, you know, it was not, you know, it was like...
Where's this beach?
Well, it's like out in the Pacific somewhere. But,
this is an important point, though.
But come on, we've had Powell has not had a good holiday, I guess is the summary. We've become more accommodative, to Conrad's point.
But he didn't push back against it quite as much in the last press conference. And this, I think, got people by surprise. Why wasn't he basically coming out and saying people need to be pricing in a whole lot more pain? There still is a hope that the U.S. economy can avoid some sort of mass downturn. But then it speaks to Mike Wilson's point. Does that really mean that stocks can avoid some of that pain?
So why is the bond market going the other way? I mean, you know, this is the jumble we're in on January 4th.
Well, a lot of it's what's going on over in Europe, the faster than expected decline in inflation. How much does that really form what happens in the U.S.?
That's the number one thing I'm looking at, and that gets us to January 12th. We'll have full coverage for you of that inflation report. Futures up 0.6%. S&P futures up 21. Futures of the Dow Jones Industrial Average up 125 points. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Donald Trump is telling House Republicans not to turn what he calls a great triumph into an embarrassing defeat for Kevin McCarthy. The former president says it's time for lawmakers to vote for McCarthy to be Speaker of the House. The California congressman failed to win a majority Tuesday in 3 rounds of balloting, thanks to opposition by hardline conservatives. The European Union is moving toward requiring COVID tests for travelers from China. EU health advisors have agreed on a draft opinion that includes masking and pre-flight testing requirements. Several European countries, including Italy and Spain, have already imposed testing rules on flights from China. In the UK, food inflation in stores jumped to a record high last month, and retailers are warning that prices will stay elevated for 1 more year. According to the British Retail Consortium, food inflation rose to 13.3% in December. The organization says the war in Ukraine has pushed up the cost of animal feed, fertilizer, and energy. FTX founder Sam Bankman-Fried now faces a trial in October on the collapse of his crypto empire. In a court in Manhattan, Bankman-Fried pleaded not guilty to criminal charges. U.S. prosecutors say they expect to produce all the evidence for the case in the next 4 weeks. And fund manager Cathie Wood has reaffirmed her support of Tesla, even as other investors are giving up on the electric car maker. Funds backed by Wood's ARK Investment Management bought more than 176,000 shares of Tesla on Tuesday when the stock plunged 12%. Wood has acquired more than 938,000 shares of the company since October. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
The windfall profits tax is not going to encourage more supply. It's not likely to reduce prices. In fact, it could do quite the opposite. If we want more energy production, we want more supply to bring prices down, putting taxes on energy production is probably not a good idea.
Michael Wirth, he is with Chevron. He's the chairman and the chief executive officer, and this is a really interesting guy. If you go out from where the Colorado Buffaloes play football and Ralphie runs around the Buffalo creating mayhem, and you go just east, there is what is called the mine shaft. That is where they mint engineering. I darkened the door at one point. Michael Wirth is a chemical engineer from Boulder, and he has done well in the oil business. Part of a conversation with David Rubenstein tonight, peer-to-peer. Mr. Rubenstein joins us right now. This guy reminds me, David, of Alan Mullally at Ford Motor with serious science and engineering chops. How is Michael Wirth different than other CEOs of the oil patch?
Well, he's very articulate. He's very smart, not that the others aren't. He's low-key. He doesn't seek a lot of headlines. He doesn't do that many interviews. But he's done this job very well since 2018. And I think he's built the company into a very, very strong position. It's got a market capitalization of about $338 billion. And under his leadership, the company keeps growing and doing quite well. He lost out on an acquisition of Anadarko to Occidental. But other than that, most of the things he's tried to pursue, he's been able to achieve.
The stereotype is that Chevron, Exxon, and the rest will go off to the northern climes of Siberia and do some dramatic international big oil joint venture. Is that stereotype any bit true today, or is there a new path for Chevron?
When the oil prices were down to $20 or $30 a barrel a couple years ago, the large projects in Siberia or Alaska or in the other Arctic, they were shelved and they're not going to be put back together again for quite some time. Although oil prices went up as high as over $120 a barrel not long ago, the major oil companies have decided not to pursue those multi-billion dollar exploration and production projects. So right now they're basically using the facilities and the oil fields that they already have, and they are exploring for new ones, but not with the very expensive things that we see in the Arctic or Siberia area. So those are probably something of the past for the foreseeable future.
Even as profits surged to record highs, we're talking about a $37 billion profit for Chevron last year. That is more than 40% higher than its last record. How is this really serving for Mike Wirth? Is it a potential liability politically, or is it just a boon that he can say, look, we can deliver after a pretty rocky pandemic reality?
There's no doubt that whenever oil prices are high, companies like Chevron and Exxon, other oil companies, do quite well, and they're used to the beating up that they get in the press and people in Washington, D.C. They've been able to forestall an effort for an oil profits tax, which President Biden has talked about. When I was in the government, we had an oil profits, a windfall profits tax. It didn't really work in the early 1980s. I doubt that something like that will pass again, certainly not in the Republican Congress or the House. So I don't think that's going to happen. But there's no doubt that oil companies are not that well loved by the public as a whole. While everybody loves to use their gasoline and their oil in their products, they don't really seem to love oil companies. And I think the oil company executives have gotten used to that, and there's not much they think they can do about it.
Although it does raise a question about whether there is still opportunity in some of the fossil fuels that a number of these big oil companies have been trying to diversify away from with certain ESG types of efforts and renewable energy investments. Did you get that sense from Mike Wirth that this was actually justifying further investment in fossil fuels that might otherwise be diverted to renewables?
I think that the major oil companies are trying to diversify, and Chevron has made acquisitions in the renewable space. But to be realistic about it, the renewable space is a very, very small percentage of the overall energy consumption in the world, and it's not going to change despite the best efforts of everybody to do so in the near future. So I think the major oil companies like Chevron, Exxon are still going to get the bulk of the profits in the foreseeable future from oil and gas. Renewables are there, but it just doesn't contribute enough to the bottom line right now because it's still so small.
David, I want you to turn to what has changed here, and I'm going to suggest in the last 16 years we've had a free lunch, a free ride on the cost of capital. It was as dire straits as money for nothing. All of a sudden, we're back to what you remember in your youth. Capital actually costs something, a return of the risk-free rate, etc. Talk to the younger people that have never experienced this. What's going to change?
Well, clearly, it's much more difficult to raise capital. It's much more difficult to get the returns that pleases investors. When money is free, it's easy to do investments and to get rates of return that people seem to like. Today, it's much harder. I think every generation, including mine, have lived through these ups and downs. And the younger generation, my children's generation, who are investing money now, recognize that it's much harder than it used to be. But you have to get used to this. These cycles come and go. I suspect the Federal Reserve is going to keep interest rates reasonably high for the bulk of this year, though I suspect by the fourth quarter, I suspect some easing will occur, and you'll see rates going down again. But for the foreseeable future, I don't think you're going to see rates go down right now.
A delicate question. I don't want you to give away the family secrets, but do you amend your internal rate of return expectations? Do you bring them in 50 beeps, 100 beeps? Do you dampen the expectation because all of a sudden money costs something?
Of course. Rates of return in the private equity world, for example, are often thought to be in the low 20s is what investors want. Net internal rates of return of low 20s. In recent years, because interest rates have been higher, things in the I'd say 15, 16, 17% net internal rate of return is much more likely and thought to be quite desirable. So yes, you do lower your expectations. That's just inevitable.
I want to wrap up with this question, not only about Mike Wirth and Chevron, but more broadly as Tom talks about his theme of the year, which is zombie roll-up. How much capital is there available to make big acquisitions or even medium-sized ones at a time when companies may be flat on their back eventually, but haven't gotten to full distress just yet?
There's a great deal of capital available for equity investments from around the world. I think the debt capacity is probably smaller than it was a few years ago because many of the banks are now holding on to loans that are probably underwater, and I don't think they want to put more loans on their balance sheet until some of these loans have been cleaned up. Some of the buyouts that were done a year or so ago have, certainly in the technology area, are underwater. A good example would be the Twitter loans. Those loans are not obviously at par. And so I think right now the major banks are not going to put up major amounts of new debt to finance large buyouts. But if it's venture capital or growth capital where debt is not as important, I think you still have a fair amount of capital available for that.
David Rubenstein, thank you so much. Really looking forward to his conversation with Michael Wirth of Chevron, the CEO, and I should note of Colorado Engineering. Colorado Engineering was so intimidating. I was there a number of years before Mr. Wirth, and it was just beyond intimidating with the heritage. You've got Colorado School of Mines, Colorado College, where David Malpass went, and it was a heritage of engineering up the eastern front of the Rocky Mountains. It was just absolutely unreal.
I wonder what the correlation is to people who go into engineering and their love of rock climbing and skiing. That might be easy access right into Colorado. I'm just saying theoretically.
Just saying theoretically, that could be possible as well. Yeah, I should point out, it's the time of Stephen Still's birthday. He is 78 years old yesterday. And it was also a time out there of a fervent of music and other things as well.
Other things as well. We'll leave for the break. I am curious, though, about how some of these CEOs of big oil really message after a year of blockbuster returns, blockbuster profits, into a time where suddenly fossil fuels have renewed interest. You raised the question about ESG. It's a really good one. How much do people de-emphasize that at a time where just recent memory seems to serve as the preeminent concern for so many people?
And how big oil climb on board it. I think that'll be a huge thing at Davos this year. Will be, the real discussion about, okay, after the pandemic, after what we've seen with the war in Ukraine, what does the new ESG look like? And that, it's an important debate.
And the other question is going to be for a lot of these companies, I know Chevron among them, are investing more in the U.S. and Western nations than they are some other nations because of the political risks after what happened with Russia. And that's also something in terms of a rejiggering in the global picture.
Can I sell forward an hour?
Please
I'm sorry, today is not normal. Jolts. Conrad DeQuadro says, shut up. 10 o'clock, Jolts, job openings, it's an important statistic.
It is, because if you start to see perhaps there to be fewer than 1.7 jobs for each unemployed American available, maybe there will be a feeling that we're moving toward a less tight labor market, which is what the Fed wants to see.
Data into the next hour, futures up 19, Dow futures up 118. The VIX comes in up fractionally 22.83. I'd notice it 22.83, a little bit elevated over where we were 1, 2, even 3 weeks ago. We haven't mentioned Bitcoin all morning. 16,800 on Bitcoin. Please stay with us through the morning, and very importantly, with Anne-Marie Horton and David Weston's work on balance of power, look for Washington's events this afternoon. Good morning.